This is 2.1. Okay, 2.1 was completed for you. So 2.1, you can actually go back and you can try do it using the same approach. Okay, so what I'm going to show you is exam technique. Right, this could have been an exam question and they've asked you for everything. They've asked you for journals, ledger, adjustments, the whole bunch, okay, in terms of possible accounting requirements. Right, you're never, ever, ever going to see an exam question that looks like this. 6 different parts, okay, because this one question could be the entire exam, right? So UNISA tends to give you separate sections covering separate topics. Okay, so you'll have one question on partnerships, you'll have one question on disclosure, you'll have one question on cash flow, you'll have another question on something else. Okay, so just bear that in mind. When you do these questions in the actual study guide, use the study guide examples as a way to practice and to prepare for those exams. Right, so the solution is there for the first one. Okay, obviously you've got the answer for the second one, but you don't have the workings. Right, so when you look at a question like this, 2.2, there's it, it starts here. Okay, it's actually quite a short question. Right, so what am I asked to do? Well, if you look at the required, they want you to show 2 things. The statement of comprehensive income, okay, and the statement of financial position. So when you go and you actually complete this activity, you need to draw up those statements. Right, so I've given you templates to use. Statement of comprehensive income, or statement of profit and loss and other comprehensive income. That's the correct name for it. Statement of profit and loss and other comprehensive income. Okay, remember, just to revise, this particular statement is looking at performance over a period of time. You're always going to be looking at income and you're going to be looking at expenses and you're going to be focusing on 12 months. That's very important. Right, so this is a template that you can use, a generic template. Right, remember, disclosure can be more detailed or less detailed. Right, so I'm keeping it simple. Okay, use the template that you've been given, okay, in the actual textbook in terms of classification. Right, I'll explain that later when we look at the solution. Okay, what I want to get right now is interpretation of accounting information, your ability to interpret the adjustment that needs to be performed, and your ability to actually record it correctly in the accounting records of the business. Right, that's the purpose of these activities, right? And it's another way of practicing in terms of your test and exam technique. Right, so when I do questions, okay, when I look at format, obviously you want to create a little guide for yourself, other income, okay, and then obviously other expenses. Right, and then you can have subtotals as well. Right, you can have operating profit and so on. So I'm going to keep it simple. I'm just going to group all the income as one. I'm going to group all the expenses as one. Okay, remember you can split it. So when we looked at that assignment, UNISA asked about like finance costs. Finance costs can be a separate line item where you can actually identify it as a separate line and work out totals before you subtract the finance costs. Okay, same with profit before tax or profit after tax. Right, tax is a separate expense that's disclosed separately. Right, you also get other disclosure classifications like admin and distribution expenses. Okay, sometimes they group those together and they keep it as one little line item here. Okay, it's totally up to you in terms of your disclosure. For now, we can worry about that later when we look at the textbook and we see how they want you to disclose it. For now, I just want to make sure that you're comfortable identifying what's income, what's an expense, and how to process an adjustment. Right, so that's what we're going to have as our template. Very simple, very easy to remember, nothing complicated. Well, obviously, we want to get to profit for the year. Okay, so I like to use 2 columns, and you'll see why. If this was a written paper, it's going to be online. So I remember we've spoken about this, where UNISA is just going to give you options, okay, and then you have to choose the right option. They might say, what is the profit for the year? You'll have to do this whole working and then choose the right option. Okay, if this was a written exam, okay, I would prefer to show 2 columns because the one will have workings and the one will have totals. Right, it doesn't matter how you represent the information. Some people use 1 column and then they put blocks here. Okay, so a block for the amount that are added up, and then a line with the total. Okay, it looks better having two columns because then you can see workings and you can see answers. Okay, either or works. Just find a method that works for you. I've seen this in a lot of other textbooks and at other institutions as well. Okay, you can use a two-column approach. It's perfectly acceptable. Okay, all right, so that's the first statement. And then the other statement, copy paste. Let's put a heading, statement of financial position. Again, you need to remember the format, layout, and structure. You should know that a statement of financial position is going to have assets, both the non-current and current. Okay, so subheadings for that section. Leave some space, put current assets, and then you'll have total assets. Total assets, and then you'll have equity and liabilities. Okay, equity here, liabilities there. Right, under liabilities, you'll also have non-current and current. Okay, and then you'll have total equity and liabilities at the bottom as a total again. Right, so that's the format, that's the layout, that's what you need to remember in terms of disclosure. Right, if this was a closed book assessment, you would have to study and remember the format. If it's an online multiple choice assessment that you're going to be looking at, then obviously you have your textbooks with you. You can just look at the actual layout and template and just follow the format that they're requiring, depending on what section you're looking at. Okay, if it's cash flow, follow the cash flow format. If it's companies, if it's CCs, if it's partnerships, just follow the format. All right, so in this question, they're asking you to disclose two things, statement of financial position, as well as the statement of comprehensive income. Right, once you've got the format, then you go and you look at the actual question, okay? And this is where the adjustments come into it. So the question starts here at the top, right? 31st March, you've got cartoon traders. It's obviously balances that are important here. Balances notice before any adjustments, right? So in every test and exam, there's always going to be easy marks. Okay, when you go through this list, you need to be able to identify where this goes. Right, so if I look at the first one, rent income. Rent income is income. It will be disclosed here. Okay, under other income. Right, and then put a bracket because you may or may not have to adjust that. So this is 64,000. Right, so this is exam technique. Right, if I was doing this in an exam, I would literally start at the top of the actual trial balance, go down the list. Whatever I read, I would disclose it in the appropriate financial statements. Notice, you're only asked to do two, the statement of financial position and the statement of profit and loss. Okay, so it is not necessary to look at the statement of changes in equity. Right, be careful. Don't do too much. Do what is necessary so that you don't go over time and you don't waste time doing things that you're not going to get marks for. Right, so if I'm looking at equity, I'm just going to summarize it here. I'm not going to draw up the entire statement of changes in equity disclosure statement, okay, with all the columns and so on. Right, so that's something to consider. Go down the list, take those amounts, put them where they need to go. Stationery, you should know, is an expense. Stationery has an amount of 3350, okay? Capital is owner's equity, but remember, we don't have the SOCI in terms of a separate disclosure statement. We have capital and drawings as part of the equity in our statement of financial position. Right, so here under equity, right, you'd have a working for it. Okay, asterisk, capital, plus or minus profit or loss. Okay, minus drawings. Right, you've already got two amounts here. You've got capital, 149. Okay, and you've got the drawings of 6084. Okay, so there's a working there we're going to be looking at for equity. Right, keep going down. You've got accumulated depreciation for equipment. That's going to affect your statement of financial position. Equipment, you should know, is disclosed as part of property, plant, and equipment. Okay, PPE. Here they've given you property and equipment. You can group it as one, but then you'll need a note. Okay, if you're using the face of the income statement or the statement of financial position, okay, record them separately. Right, I wouldn't want to show property, plant, and equipment all as one, because then I'm going to need a note for it. Okay, and this question probably didn't ask for notes. Did they ask for notes? They just said show all calculations and it must comply with IFRS. Right, they didn't say notes may or may not be excluded. Okay, so everything needs to be disclosed on the front, okay, on the actual statements. I'm going to show them separately. Property, okay, equipment. The one that I'm looking at here is equipment. Right, I need the cost because I'm looking at the accumulated depreciation. So obviously cost is going to come there, and then you're going to subtract accumulated depreciation. Do I know what the accumulated depreciation is? Yes, I just read it in the question, 15,000. Right, you can see it there. Right, commission income, that's going to go here. In brackets, 2,700. Right, credit losses, you should know is an expense. Okay, in brackets, 1,600. Property at cost, 350. Okay, so now I've got property, 350. Equipment cost, 34. Bank favorable. If bank is favorable, it's an asset. Remember, you need to disclose current assets from non-current assets. Bank would be a current asset because it's a favorable bank balance, 24208. Okay, just double check that I'm reading the right amounts. Okay, as you go, just check it. Okay, got the chat open. If you have any questions, let me know. Just type it on WhatsApp. I'll see it. Okay, trade receivables. Similar to debtors. Okay, debtors would be part of trade receivables. That amount is 26,100. Interest on mortgage. Interest on mortgage is an expense. It's financing costs. Okay, you can put it under financing costs. I'm just going to put all the expenses under the same heading. Interest on overdraft or mortgage. Okay, in brackets, the interest on mortgage was 23,870. Right, municipal taxes, another expense. Okay, rates and taxes need to be paid to the government. That's what we're looking at there, 4,333. Right, insurance, another expense, 2,405. Right, then you've got a mortgage and you've got water, electricity. Okay, mortgage is a liability. We need to show that here at the bottom. Okay, the mortgage was for 248. Right, the water, electricity is going to go under expenses. In brackets, 2,750. Right, and that's it. Those are easy marks. Okay, because of disclosure, you need to know where to put what. Right, that's very important. Right, now you go to and you look at your adjustments. Right, so I'm looking at your workings. Okay, your working here for number 1 says debit accrued income, credit rent income. Let's see if you're correct. Number 1, Cartoon Traders has 5 tenants, each paying different rental amounts. At the end of March, one of the tenants owed 2 months' rent to the entity. The monthly rental payable by the tenant is, yes, perfect. Right, if the tenant is the one paying, right, the tenant is going to obviously pay you. You're going to receive income. Okay, so rent income, where is it? Here. There's my rent income. Right, your working says you should credit the rent income because it's understated, 100% correct. Very good. Right, so they had 5 tenants, each paying rental amounts, different rental amounts. At the end of March, one tenant owed 2 months' rent to the entity. Right, so it'll be 2 times this 1750. Okay, notice you've got the right working. Okay, see how important that working is. You said credit rental income. Okay, if I'm crediting rental income, what happens when I credit an income? I increase it. All right, so you would show a plus here of 2 times 1750, close brackets. Okay, good effort there. Number 2, stationery on hand. Okay, amounted to that amount. What did you have? You had debit stationery on hand, very good. Right, you even had asset increase. You've got the working. Stationery on hand is a current asset. Okay, accrued income is a current asset. Right, so you need to show the other half. Right, so I need to show here accrued income, accrued rent income. Or let's just keep it as accrued income. Actually, let's just keep them separate. We'll write down all of them. You can group them as one if you have multiple accrued income line items. Right, I'm going to keep it separate. We need to show the 2 times 1750. Okay, notice even in disclosure, there's the debits and here's the credits. Do you see that? Right, every debit has to have a credit. Same with this one. Okay, stationery on hand, easy. This one needs a bracket, 1550. That's the stationery on hand. Right, notice your working said credit the stationery. If you're crediting the stationery, what are you doing to the expense? Well, if you know your rules, an expense will decrease on the credit side. So that's why you show a minus here. Okay, minus 1550. Right, that's how you process those workings. The workings give you the right, how can I say, gives you the right answer. Okay, it gives you what you need to do. Right, that's why these things that you had done previously, right, debit stationery and credit stationery it's so important, because if you've got that knowledge, then you're able to get that. Okay, minus 1550. Right, the next one, commission income, 750 was earned for April and May. Right, what month am I looking at? I need to go check. I'm looking at March. Okay, so if I'm looking at March, I've earned income in advance. What did you go with? Income received in advance, brilliant. Liability credit, good. Get your mark for the credits. Income received in advance is a current liability. Okay, the income received in advance, commission income of 750 was earned for April and May. Okay, what was your interpretation? This 750, is that the total for April and May? Did you go with that as well? Because to me, if I read this, commission income of 750 was earned for April and May. Does that mean 750 is for April and May? So in other words, 2 months of 750, or are they saying commission income for both months is 750? I went with 750 being for both months. That's my initial impression. That's how I would interpret it. You went with both months as well. Perfect. I agree with you. Okay. We can check the answer later, but it's always good to check, just to make sure that your interpretation and my interpretation is the same. Reading this, 750 for April and May. Right, so there's the 750, income received in advance. Right, you had debit commission income. Very good. Your working is correct, income decrease. So you go to the top here, okay, where you have commission income, you will show negative 750. Next, number 4. Mr. D disappeared and the management decided to write off debt. Okay, this is bad debt. What did you go with? You went with debit, credit, loss, credit the debtor. Very good. Correct working. Right, notice you record both. You record the credit losses here in brackets. This was 2650. Okay, there's there. And then remember, credit losses affect your debtors. You've got that in your working. Right, so credit the debtor. Debtors belong to trade receivable. So here, you're going to show a negative, minus 2650. Number 5, provision should still be made for depreciation on equipment at 10% per annum using diminishing balance. Very important. Right, we've spoken about diminishing balance using carrying value. Okay, revision. 1502. Go to your equipment. There's your equipment. Okay. I'm going to subtract, open brackets, depreciation. The depreciation is going to be calculated using diminishing balance. I know I'm dealing with equipment, so I'm going to say 34 minus 15. And I'm going to multiply that by 10%. Okay, and that'll be in another bracket. Right, so that's the depreciation. Depreciation is going to be debited. What did you have in your working? Debit depreciation, very good. You're going to show the expense. Okay, there's my credit accumulated depreciation. Accumulated depreciation will go against your equipment. Right, let's go put in the depreciation as an expense. There's the working. Number 6. Water and electricity for March amounting to 310 has not been paid. If something hasn't been paid yet, it's an accrued expense. Did you go with that? Yes, you did. Okay, I see your working said credit accrued expense. Very good. You know that's a liability, so that's going to go here. Accrued water and electricity expense. Okay, because I'm showing them all separately. Right, in brackets, 310. Okay, what did you go with? For the debit, you went with the water electricity. Good. Okay, you even had the working expense increase. So here's water and electricity. Increase means to add. So you're going to plus. What is the amount? 310. Number 7. Insurance premium for April was paid in advance. Right, if it's paid in advance, it's a prepaid expense. Did you go with that? Let's check your working. Yes, you did. Okay, I see debit prepaid expense. Good. Well done. That's a current asset. Prepaid insurance expense, bracket, what is it? Okay, we need to work it out. Okay, the insurance premium for April was paid in advance. The premiums are paid in equal monthly installments or amounts. Okay, so my insurance amount, in other words, this amount here, where is it? Here. There, the insurance. Okay, you're going to subtract 1 month's worth of premiums. Okay, because this was for April, paid in advance. So minus 2405, okay, divided by 13. Right, I've paid for 13 months. I only have 12 months in a financial year. Right, so do you see my working? I'm subtracting 1 month. To get 1 month, I need to divide that figure by 13. Okay, copy that. My prepaid insurance expense is going to be that answer. Okay, 1 month's worth of prepaid insurance. Right, then the last point, interest on mortgage is calculated at a rate of 10.5% per annum. The interest for March is still to be accounted for. Notice it's for March, meaning 1 month. Okay, I actually want you to work this out because I think it's important. I want to know if you can still do pro rata interest calculations. Okay, can you work on your calculator and then send me the answer on WhatsApp? I'll check what you've got and then I'll do it and you can check your answer. Okay, how much interest is going to be outstanding? If I check your working, you've got the right working. Debit interest on mortgage. Okay, do we have interest on mortgage here? Yes, we do. Okay, we need to correct it. Right, we need to do something here. Okay, credit bank. Ooh, be careful. All right, that's incorrect. All right, so Cheryl, I would correct your working here. Hopefully you've got your laptop nearby and you can just change it. For number 8, let me just show it to you here. Let me move it across there. Okay, this needs to change. There's an error here. Okay, they didn't say you paid this. They said it's outstanding. All right, so please just fix that. This needs to change. Okay, this will be accrued expense. Okay, be careful there. The rest is perfect, just that one. Right, you're obviously debiting the interest on mortgage, and you're going to show the interest that hasn't been paid. Right, notice the interest for March is still to be accounted for. It hasn't been accounted for. You haven't paid it. You can't affect bank. Right, it needs to be credit accrued expense, accrued interest expense. Right, try work out the amount. What is the amount going to be? When you have the answer, send it to me on WhatsApp so I can see it. And then we can check it. Okay, remember you're getting the interest amount. How's your workings and calculations? Are you managing? Okay, I see you're busy typing. You went with 2170. That's your answer. Okay, let me check it and see if you're right. Right, so this is what you would have done for number 8. Interest is 10.5% per annum. I need to know what the mortgage is. Where is it? Here, liabilities. There's the mortgage. 248,000. Do you see it there? All right, so when working out the interest, okay, on this line, interest on mortgage equals 240, what is it? 248. Let me just double check. Mortgage, 248. Okay, multiply that by 10.5%. Okay, remember, they tell you in the question the interest for March only was outstanding. So pro rata means to apportion it for a year. Okay, so you would have typed that into your calculator. 248 times 0.105, okay, times 1 over 12 is, very good. Well done, Cheryl. Good answer. Correct answer. Right, 2170 is the right answer. Right, notice in the question they said it still needs to be accounted for. So your debit for the interest is correct. You're going to show a plus here. Okay, 2170, close brackets. Right, and then you're not going to affect bank here because it hasn't been paid. I'm not going to credit bank, so I'm not going to put that there. Right, your working should have been, just have a look. Ooh, disappeared here. Let me stretch it across. All right, it should have been there. It should have been credit accrued interest expense. All right, so fix that working so you've got the right one on your Excel spreadsheet. Let's put that here at the bottom. Current liabilities, accrued interest expense. Okay, it's unpaid interest. What is the amount? 2170. And that's it. That was all the adjustments. Right, so that's your exam technique. This is what I need you to do for all the other activities. Right, so 2.1, go back and try to do it like I've done it here. That's the best way to practice. Accounting is a very practical subject. Right, no student would be able to learn and study accounting by reading through the examples. Right, and that's why I'm doing it like this, because this is how you get better at doing your accounting. You have to take every single textbook exercise. You cover the solution, the answer. Okay, you do the answer, you do the question, right, and then you go back and you check it, like what I'm doing here. Okay, obviously you would have had to have covered the theory first, which requires some studying, but that I'll do with you. Okay, we'll go through all of it. But at a later stage, okay, closer to exam time, come back, close the answer, do it again, see if you can do it. Okay, for all the activities, and especially the sections that you're struggling with, right? So maybe it's something like partnerships, right? That's a good section to redo. Maybe 2, 3, 4, 5, 6 weeks down the line, okay, after we've completed it. Because then that shows whether you can still apply the theory correctly. Okay, once you know how to do something, you're not going to forget it. All right, so I've completed it. All I need to do now is wrap up. All right, did I have any sales and cost of sales? Not for this particular business, because this business was probably a service entity. They didn't buy and sell goods. What business were we running here? That they say? Cartoon traders, yeah. Okay, cartoons would be maybe content, okay, stuff that you would stream or download or watch on a particular platform. Okay, all right, so we don't have any sales. We don't have any cost of sales. You can ignore that. In some questions, you might have it, then you'd have to complete it. All right, so you won't even have other income. You'll just have income. Right, so that's where I am currently. Right, so rent income. Add up. Commission income. Subtract. Right, then for these, okay, and then maybe you can put a little line here and you can just say total operating income, just to show a total, because we don't have gross profit. There's no gross profit here, okay? The total would be the sum, and then you'd add up those two. Actually, because I'm using two columns, I want to move this across. Okay, there, like that. And then put one total here. This should actually go on the top, not the bottom then. Let me fix my disclosure so it looks nice and pretty. Copy, paste. Okay, delete. Right, so remember the two column approach? I would do it like that. Okay, so rent income would be my working, and then my total would go in that column. And then I would just add up. Right, same with this. Okay, I'll have a total there. Okay, and I'll put my workings there. Right, so stationery, tally up. Credit losses didn't change. This did change. 4,333. Okay, this did change. Work it out. Okay, this did change. Okay, 2,650, that changed, and then depreciation needs to be calculated. All right, so this is how I would do it for your actual tests and assignments. Even the assignment that I did it the same way. I did it on Excel, and I just used Excel to help me work out certain things. It's easier. Okay, you don't have to worry about adding up. You can just have Excel do it for you. Right, that's the nice thing about this being online. Okay, Eunice is not going to know whether you did this on paper or you did this using Excel. Okay, it's easier using technology, so use it if you can. It's a lot better, it's a lot faster as well. Okay, it's quicker. If you make mistakes, you can update it easily. You can just go back, look for your mistake, and correct it. Right, are you happy with that? Hopefully. Okay, then you just need to subtract. Okay, remember income minus expenses gives you profit for the year. Profit for the year is this minus that. Right, who gets the profit? It's attributable to the owners of the business. So in other words, it'll affect owner's equity. Okay, we spoke about that last week when we looked at basics, okay, and we looked at owner's equity and the impact it will have. Okay, so we know this is going to affect this line item. Okay, where's it? Here. All right, so this profit figure I can change, I can update. I'm going to show 25847. Right, it's going to go there. Okay, then I can copy that. My equity is going to equal that figure. There's my equity. Right, now we need to wrap up the statement of financial position. Right, property, same thing. Use two columns. Just going to move that across. So I've got space, 350,000. Okay, equipment needs to be calculated. Right, there's my equipment. Right, so total equals the sum of those two. There's the total. Right, bank, 24208, that didn't change. This changed. 175 times 2, 1550, what is it, 2405 divided by 13. There we go. Current assets, tally up. Okay, there's your double columns again. Right, so notice the working is in one column, and then the totals in the other column. Right, the final value here is obviously going to be for the total assets. How do I get the total assets? Non-current plus current. This plus that. Okay, there's your total assets. Okay, then here at the bottom, equity I've calculated. The mortgage I need to show 24000. Okay, 248000. Right, again, two columns showing it in this format. Okay, income received in advance. This and that. Okay, current liabilities sum up. There we go. Right, so total liabilities in terms of disclosure, I need a total there. Okay, that total is going to be those two amounts added together. Right, there's my total for my liabilities. Right, then I need a total for my equity and liabilities. Right, how do I add up equity and liabilities? There's the equity and there's the liabilities. Right, you have to add up those two amounts. Okay, so this plus that gives you, it should be the same answer. All right. If you are asked to do a statement of financial position, make sure that the total assets here at the bottom equal the total equity and liabilities. Why? Because of your accounting equation. Okay, that's why the accounting equation is so important, because it allows you to find missing figures if you have incomplete records. Okay, that's something you would have done in 1502. For 1601, it just helps you to check if everything is in line in terms of your workings, right, to make sure that it balances, right, because this is separate from that. Okay, if you've done it correctly, it should balance. All right, and then see, that's what I would do. Okay, for all those activities. For 2.1, you can go redo it. The workings in the textbook are very good. Okay, you now have a set of workings here for this question. Right, let's see how you did. Okay, sales and cost of sales, you didn't have to put in. That's brilliant. Okay, did you have the right income? Rent income. You had the rent income. You had the commission income. What happened with your adding? Oh, your rent income, you didn't adjust it. Do you see that? Do you see this? Do you see that, Cheryl? Okay, there needs to be an adjustment there. Okay, highlight that. All right, why are you adjusting your rent income? It's because of these workings. Notice how important these workings are. Okay, go back and have a look at working number 1. Right, make a note for yourself. Right, working number 1 is income, rent income. Rent income affects the income statement. Okay, statement of change, a statement of comprehensive income. Accrued income is an asset. Okay, statement of financial position. Okay, or the balance sheets. All right, so FS, financial position, or FP rather, financial position. Okay, and then CI, comprehensive income. Right, do you see that? Yes, no? Can you just type something in the chat so I know that you're okay with that? Do you see why I asked you to do those workings? Do you see how important it is to have those workings? Those workings tell you what to do in terms of disclosure. Okay, remember we said last week in terms of statement of financial position, okay, assets and liabilities are disclosed there. Very important. Any asset or any liability that I pick up on, I'm going to affect that statement. Same with the statement of comprehensive income. Any income or expense, I'm going to use that. Right, so when I see income, when I see expenses, I have to disclose it. Okay, so I like workings. I'm always going to ask you for workings because if you get the right working, you'll get the right answer. I added 1750. I didn't multiply it for 2 months. Okay, that's the notes. All right, yeah, possibly. Okay, 2 months. Why? Let's go back and check. Let's see if it is 2 months. It should be. Where's the question here? One of the tenants owed 2 months rent. Yeah, that's what they said, hey? Yeah, just be careful. It was one tenant, but it was for 2 months. All right, let's check my solution with the one in the textbook. Okay, let's go back. Right, is my first statement correct? I'm just going to look at the total. Yeah, 25847, it's correct. See, right, that's what you would do. You would do the question, check the question. Do the question, check the question. Right, obviously, this is a lot of FAC 1502. Right, this is a question you could have done last year even. Okay, because all these adjustments were covered, or last semester, I should say. Okay, so there's the one answer. There's the profit for the year. Okay, let's see how they've shown it. Yeah, they've also shown workings here that this is a good solution. Okay, the interest on mortgage, they even showed the calculation. That's very good. But be careful here. Why didn't they show 1 month? I see interest on mortgage here. Okay, they're just showing the full year. I see what they're doing. Okay, they're just timesing it by 10.5% because that's the full year. Right, notice their working isn't that good. Okay, because that working doesn't show the adjustment. Okay, my working shows the adjustment. Your working shows the adjustments. Okay, have a look at your working. Where's your working? Here's your working. Okay, your working shows the adjustment. Interest on mortgage, expense. Where are expenses shown? Statement of comprehensive income. Okay. Accrued interest expense is a liability. Where is that shown? Statement of financial position. Right. See how important this working is. If I've got the right working, I know where to put it. Right. So they would have disclosed it here in the statement of comprehensive income, and then further down. Did they have it here? Yes, they did. Here, it's part of the calculation here for trade and other payables. Okay, they've just grouped it as one. If I go to my trade and other payables here at the bottom, okay, there's my 750, there's the 310. Okay, there's the accrued interest expense. Okay, notice they've done the subtraction. Okay, slightly different working, same answer. Right, that to me looks confusing. Okay, sometimes I don't quite understand how they get their workings, to be honest with you. But they get the right answer eventually, which is fine. Okay, this is the best option. This makes complete sense. Why? Because I looked at the adjustment. Okay, everybody that has done accounting in terms of FAC 1502 from this working will be able to get this. Debit, interest, okay, credit, accrued interest expense. Right, interest is an expense. It must go to the statement of comprehensive income. Accrued interest expense is a liability. It must go to the statement of financial position. Right, and that's how you would adjust it. All right, that's my approach. That's how I do disclosure questions. Right, it's simple. It's easy. As long as you know your basics, you can get it correct. Okay, basics are so important. That's why I'm trying to do as much of this as I can with you to get you thinking about these workings. Right, out of 8 workings, you got 7 out of 8. That's brilliant. Okay, I can see why you got your 70% last semester. Okay, you're good at your basics. Right, 7 out of 8 is perfect. It's actually 7.5 out of 8, actually. Okay, because you only got the credit here incorrect. Okay, just be careful. Right, I haven't paid anyone the interest. Right, the interest is still outstanding, and that's why it's seen as an accrual. Okay, it's an accrual. That's why they've shown it here at the bottom. Okay, hopefully that's making sense. Let's go check the rest. Let me scroll up. Where's my financial position? Here. Okay, where's their financial position? Here. Okay, non-current assets, same amount. Okay, they've put it as 1. See, they've used property, plant, and equipment because they've grouped it according to the PPE. But if you do it this way, you actually need to have a note. Right, it's better to show it separately because you're not disclosing a separate note for property, plant, and equipment. Right, when you're grouping things together, you need a note. Okay, there should have been a note number 1 here. There should have been a column here that said note, and there should have been a 1 here, a 2 there. Okay, where you have things that are broken up. So, for example, trade and other receivables, same thing. There will be a note there. Okay, because they've grouped it as one line item. Right, I don't think they'll penalize you if you keep it separate. Okay, other institutions also don't penalize students if they keep it separate. They actually prefer it because at least then they can see all the different workings and calculations. Right, be careful though, if it's a multiple choice question, then I just need to look at my options. Okay, if my option is trade and other receivables and there's no other line items like accrued rent income or stationery on hand, then I'm just going to add up everything together. Okay, so just try add up things that you need to. I like to do it this way, and then if I have a multiple choice question, then I can just adapt it to the multiple choice to get the right answer. Okay, because I've got everything separately identified in my actual working, so I can group things later on if I need to. Right, current assets 52893, it's correct. 419993, it's correct. Right, equity, did they have the same working? Yes. Okay, capital plus minus profit or loss minus drawings, good. I agree. Same answer? Yes, I agree. Okay. Total liabilities, was it the same? Yes, okay, we had the mortgage, then they added up the current and non-current. They showed the disclosure for total liabilities. That's also good. Okay, yeah, I like their solution. Don't quite agree with all their workings, but it's fine. Same answer. Okay, happy with this one? Happy with this activity? Okay, perfect, yes. Where's the smiley face? Ooh, I need to get the emoji. There we go. Okay, well done. Nice effort, Cheryl. Considering this was your first activity and you were able to get all the workings, 7.5 out of 8, that's brilliant. Okay, so now I'm going to ask you, I can do another one with you if you want me to, or if you want to try it on your own, you can tell me what you want to do. Okay, remember the flow is totally dependent on you. So I'm going to go back to the textbook. Okay, here's the next one, 2.3. Okay, do you want to do this together now and you can see the disclosure? Or do you want to try this on your own and see how it goes? Okay, there's the adjustments. What would you prefer? Okay, because it's the same, you'll just have a few different adjustments. Let's see, in the chat, I want to try the activity on my own. Perfect. Okay, great. Right, so again, same as what I've done. Do the workings, okay, like I've done it, or like you've done it actually. Okay, the workings are important. Once I've got those workings, reference it correctly. Okay, show it correctly. And then you should get an answer that looks similar to theirs. All right, let me know how it goes. If it doesn't go well and you do need me to look at it with you, then we can discuss it in more detail. All right, chapter 2 is actually revision. If you look at the heading here, okay, chapter 2, sole proprietorship. It's revision for FAC 1502. Okay, and that's why I'm saying, well, if you feel confident enough to do it, then I'll leave you with another example to do. If you struggle with it and if you have problems with it, then we can always go through it and we can check it. Okay, right, so if that's what you're preferring, that's awesome. Then we can start with a new section. We can look at this one, number 3. There we go. Okay, perfect. New section. Now we need to look at our notes. We need to look at theory. Let me just bring the notes up. Do I have my PDFs open? Okay, no. Right, I'm going to close your workings. Let me open up my notes and we can look at theory. Okay, this would be Unit 2. Unit 1 was all basics, looking at FAC 1502, recap in terms of study Unit 1 and study Unit 2. Learning Unit 3 will be for the second set of notes. Okay, so when I talk about notes, I'm referring to the PowerPoint presentations, okay, the PDFs that I had sent to you previously. Let me just get the right one, the PowerPoint. Yeah, here's the PowerPoint. Okay. This is it. Support material 2 is looking at that. The establishment of financial statements of partnerships. Okay, that's what we're looking at currently. Right, so what do we need to look at here? Well, there's quite a few things. The first few pages here from slide number 2 to slide number, number 7, yes, okay, is revision. This is worthwhile just to recap in terms of what we've covered before, right? Because you'll see the same thing in study Unit 3, okay, which is partnerships, looking at the disclosure for different partners in the accounting records of the partnership. Remember, the partnership isn't a separate legal entity, but you have separate partners that are conducting business together. Right, so you do need to go back and just look at these basics. Okay, you should still remember what an asset is. There's a definition in case you forgot. Same with the liability. Make sure you know these definitions because you need to apply those rules. Right, the rules are very, 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 very important. The rules help you in terms of the working. Once you've got the right working, you can then record that appropriately in your accounting records. All right, so I'm just going to quickly run through these slides. This is all stuff we looked at before. Just recap slides, income, expenses. Don't forget the rule. Make sure you know where the pluses and minuses are because this will apply to partnerships as well. Right? It doesn't matter what type of business you're dealing with. You will always have the same rules. The basic principles stay the same forever and ever. Okay. Here's capital. On this slide, we can maybe write a little note here or a little highlight. Okay, before capital was capital, and that was all it was. Right, when you look at this course, in fac1601, capital is now going to be split into different types of capital. So if it's for a member, okay, for a CC, it'll be members' contribution. If it's for a company, it'll be share capital. If it's for a partnership, it'll just be capital partner A or B or C. Drawings, same thing. Okay, you're taking drawings a step further. Drawings is drawings. Drawings is obviously when owners, okay, notice the words I'm using. I'm using the word owner. The person who has ownership in that particular business. So if it's a sole proprietor, it's the owner. If it's a partnership, it's the partner. If it's a closed corporation, it's the member. If it's a company, it's the shareholder. Right, so just bear that in mind, okay, when you're looking at these different sections, because drawings won't always be drawings. Capital won't always be capital. But do I use the same rule? Yes, I do. Okay, so I can call it whatever. Capital will always have a credit plus, and drawings will always have a debit plus. Right, there's the note about the double entry and a note about the transaction analysis. Okay, every debit has a credit. Make sure you can apply the rules. That's the important bit. How do you apply the rules? Get the right accounting elements. Get the right account and the effect. Okay, if you have all of that, remember you had those 4 steps. Step number 1 is the keyword or the account. Then you need the element. Then you need the effect. Okay, if you've got all of that, you've got everything that you need in terms of the debit and credit. And then you can do any question in terms of disclosure. Right, the process, you're not going to look at journals. You might look at ledger, but only as a working, okay, when looking at certain sections. This whole course is focusing on the last line. Disclosure. And that's why templates are so important. You need to be able to disclose financial position, financial performance, cash flows, and even equity. Equity will be very important for this particular section. Okay, study unit 3 in your study guide is covering partnerships, okay, how they're formed and how they're disclosed. Right, what is the goal of accounting? That you should know. Do you remember? Just type one word. What's the goal? Goal of accounting. Decision making. Okay, decision making is actually the financial management part of it. Okay, the goal of accounting is to generate information. Okay, that information will be taken a step further in terms of the decision making. Right, so the decision making is not the role of the accountant, unless that accountant is also a financial manager. Then they're going to be making decisions based on information. Right, it's providing information to users. That's the key. Right, accounting is creating the information. Financial management is using that information. Okay, that was something we looked at in terms of theory. Right, so what are you going to be looking at in this course? Well, in FAC, it's all about the useful information. And how do we create useful information? By drawing up a set of financial statements. Right, so this summary slide is showing you which accounts to be mindful of and to monitor in each of those different questions. Because remember I said earlier, when you write an exam, they're not going to give you 5 different requirements for one question. They're going to give you question 1, looking maybe at a sole proprietor. Okay, for the sole proprietor, you have to do the disclosure in terms of profit and loss. Okay, then they might give you question 2, which is looking at partnerships. Okay, and then they're asking you for changes in equity. Right, and then maybe question 4 or question 5, right, you've got a cash flow statement. Right, so each question will be separate. Don't look at everything, look at what you need. Right, so the reason why I have the slide up is because if I'm looking at this statement, what do I care about? The income and expenses. Do I worry about anything else? Not at all. Okay, and you'll see that more later on when I do test papers with you, okay, exam papers with you, because when we go through those questions, you'll see I always talk about what am I looking at? Okay, am I looking at performance or am I looking at position? If it's position, I'm looking at a point in time. I'm looking at the asset, I'm looking at the liability, and I'm looking at a particular date. Okay, what is the carrying value at that particular date? What is the liability at that particular date? And then same with other statements, right? Make sure you know what to look out for. Okay, when I look at equity, this is very important because we're going to be focusing on owners, different types of owners, partners, members, sole proprietors, shareholders. Okay, all of that will be part of statement of changes in equity. And then cash flow is separate. There, you're only going to be focusing on bank. Okay, so this is important in terms of technique, okay, approach. Right, what question have I got in the exam? What am I going to be focusing on? And then narrow your focus. Focus on those particular things. Think about that particular account. Okay. Awesome. Let's check your basics. Right, so when looking at the establishment of those financial statements for partnerships, we need to go through some of the theory. Right, theory, I'm going to refer you to your textbook. Remember that volume 2 textbook that is prescribed for this course? It's a brilliant source of additional information, and they give you lots of background regarding how and why sole proprietors are converted or changed into partnerships. Okay, so I want to ask you, partnerships, how would you explain it? If someone had to ask you what a partnership is, how would you define it? Okay, I know you're using the chat, so it might be difficult to give a longer answer. So just give keywords is fine. Just give me like main points. So remember, we're defining it. Okay, so define what a partnership is. Okay, I see your message in the chat. A partnership is when 2 or more people own a business. Very good. Yes, that's brilliant. Right, so in terms of the definition, in terms of your understanding, okay, look at the textbook if you want greater understanding. From an accounting point of view, okay, you've got A and you've got B. Okay, A and B are separate. That's the first thing that you need to identify. All right, so they're separate individuals, but they're conducting business as one. That's how you need to view a partnership. Right, they're unique, they're individuals. Okay, it's like a relationship. Okay, so think about being in a relationship, right? Okay, 2 separate individuals, right, but they are working together to achieve something better. Okay, that's exactly what you have here. It's like a marriage. Okay, a marriage has 2 separate individuals, and they're individuals, but they work together. Right, so why would you want to do that? Well, in a relationship, in marriage, in business, it could be because you want to increase your capital. Okay? And capital doesn't always have to be monetary. It can also be skills. Okay, collaboration. Right, so maybe A can do certain things, but B can't. Maybe B has more capital and A doesn't. Right, so the point is, it's a combined effort. Right, you're bringing 2 separate entities together in order to conduct business, in order to create more value. Okay, value is key when looking at financial management. Okay, we create products and services to add value. Right, businesses sometimes team up. Okay, one sole proprietor working with another sole proprietor, being able to create more value. Right, so when you look at the textbook, they talk about capital, resources. Okay, that could be assets. Assets in the form of land and buildings, equipment, money. Okay, that could be an asset that could be increased. Okay, when you join forces. Sometimes you want to eliminate competition. All right, in business, you might have lawyers. Okay, lawyers sometimes form partnerships. Okay, to eliminate competition, they work together instead of competing against each other. Right, doctors can also form partnerships. Accountants can also form partnerships. Right, a lot of services are generally formed as partnerships at the beginning. Okay, early on. Okay, obviously later on they become companies and other forms of structures. Okay, but the first reason that you obviously want to consider is more resources. Resources in the form of capital, which is assets, money, or skills. Okay, collaboration, working together. Okay, 1 plus 1 can equal 3. Right, when you have good synergy. Right, so just remember that. They're separate. So if they're separate, I want you to answer these questions. Okay, the first one, just go yes or no in the chat. Is a partnership a separate legal entity? What answer are you going with? No is correct. Very good. Okay, circle that, highlight that in your notes. Is a partnership, okay, or does a partnership have unlimited liability? Again, yes or no? Okay, looks like you're thinking about this one, hey? Do you still remember what unlimited liability is? This is more business management or operations, forms of ownership. If you did business studies at school, they might have covered this with you as well at a school level. You said yes. Very good. Okay. Unlimited liability means both partners are jointly and severally liable. Okay, that's important. Okay, so just remember when you're looking at unlimited liability, right? And that's why I like using that analogy of being in a marriage. Okay, obviously you want to choose the right person. Okay, you don't want to marry someone you don't agree with. Why? Because you become jointly and severally liable, meaning their debts become your debts. Right, it's even more important to choose partners carefully in business. Okay, you don't want to get into business with the wrong individuals, right? Because the same thing will apply. And in a partnership, okay, there is no A and C in a partnership. At least if you get married, you can maybe consider that, okay? Or community of property, right? That's for marriages. Okay, that's matrimonial law. Okay, that's something that's completely separate to what we're looking at here. Okay, but it's relevant because of this unlimited liability. Right, in business, you don't have a choice. Okay, whether you like it or not, there is no A and C. Forget about that in business. In business, it's jointly and severally liable. Right, community of property, in other words, when looking at businesses. So when partners get into a partnership in business, both partners are liable for the debts of the business. It's unlimited. If A can't pay all the debts, B will have to help cover A's debts in the actual partnership. Right? And that's why you need to choose partners very carefully, especially when you're looking at this form of ownership, because you're opening up yourself to more liability. Right? Rather start a company then if you're worried about the other individual, okay, in terms of their liabilities or their debts. Okay, last question to consider here. How are partners taxed? So are partners taxed individually or are partners taxed together? What do you think? This is important in terms of disclosure. You'll see why. Let's see if you know the answer. How are partners taxed? Any idea? Okay, I know the connection might be a bit slow, so I'll wait and see. Type a message in the chats. Do you know how partners are taxed? Ooh, looks like Cheryl's not... Okay, Cheryl's still in the class, that's fine. Okay, I'm just checking the WhatsApp as well. Okay, I see you're still around, that's good. You haven't lost connection. I thought you might have lost connection maybe. Do you know, Cheryl, how are partners taxed? Any idea? Okay, you said individually. Correct. Very important. Right, so when partners are taxed, A will have to submit their own return to SARS. B will have to submit their own return to SARS. Right, so in the eyes of SARS, they're separate. Okay, so if they're separate, when they're conducting their business, is the business separate? No, the business belongs to A and B. But when you're looking at their personal affairs, okay, SARS will look at A's own individual tax affairs. Okay, the same thing with B. Right, so what must you do when you have a partnership? They talk about this appropriation. Okay, appropriation means to share or to split, inverted commas. And that's important to note when looking at study unit 3 in your study guide. Okay, you need to remember that partners are running one business. Whatever happens in the business must be split. So if the business makes a profit or a loss, okay, that profit or loss must be appropriated. It needs to be split between each partner. A gets a share, B gets a share. And the reason for that is in the eyes of the law, okay, as you said in the chat, they're individuals. Right, they're separate. Right, SARS views them as being separate, the law views them as being separate. Right, they just so happen to work together in terms of a business, that's all. Okay, just remember, I think I have that on the next page. Yes, I do. Okay, this is some law. How are partnerships formed? Well, if you read the textbook, they talk about this agreement or contract. Okay, it's a, inverted commas, marriage of partners. Right, partners, partner A marries partner B. What do they need to show the marriage? They need a contract. Okay, two separate individuals working together as one. Okay, the business is going to be running as one business, not two. Okay, remember the business is inverted commas, okay, separate in terms of operations, right? But when you look at each partner deserves a portion of the business's profit or loss, depending on what you've got. Okay. On the next slide, we've got a note here about partnerships. Do they last forever? Cheryl says no in the chat. Correct. Okay, so when you have partnerships, right, it's like a marriage. Sometimes marriages don't last forever. Okay, when looking at partnerships, the same thing applies. Right, two individuals can split. And if they split, what happens? Well, will the business continue operating? No, the business will not continue operating. Right, and that's why you have a dissolution. Okay, in marriage they call it a divorce, right? In business they call it a dissolution. Right, what is a dissolution? It's when those two parties split. Okay, and they basically stop or they cease to exist. The business stops operating. Right, so if A and B go their separate ways, the business literally needs to stop operating as well. Okay, remember we saw that note earlier? Okay, you answered correctly. Is there a separate legal entity? The answer is no. Okay, but they're operating as a business. Right, so what do we need to consider? These are the things that you need to identify in the actual textbook scenarios, questions. Okay, remember you'll see different activities covering different concepts, looking at disclosure. When you're looking at partnerships, right, I always try to keep things simple by relating it to things that you already know. Okay, so I'm sure you know what a capital account is, yes? We recapped it earlier today. Okay, there's a slide on it talking about money or assets that the owners contribute. Right, will you have capital accounts for partners? Yes, you will. Is it the same as your sole proprietor? It's identical. Just remember, long-term versus short-term. Right, capital is the account that represents what you had invested in the partnership. Remember we said the partnership is a business that's going to be run by A and B. A might give a certain amount of assets. B might give a certain amount of assets. What they had initially gave in terms of their contribution would be seen as a long-term investment. Right, and that would be their capital. Okay, capital refers to long-term. The word current, just think about current affairs. Okay, current affairs is news. Okay, if you switch on the TV and you watch news, that's current affairs. Current refers to short-term. Okay, profit. So in other words, whatever the business is producing, after having invested time, effort, resources in the partnership, any benefit that's derived through the partnership will be attributable to the partner's current accounts. Okay, current account is for operations. You can even use that as another way of remembering this. Right, so if it relates to operations, it'll go through the current account. If it's related to capital, it's long-term. Right, and you'll see that when we look at different types of questions. Okay, when you look at a liquidation, okay, or a dissolution, okay, when you're dissolving a partnership, there you're going to be looking at the capital accounts. Why? Because it's long-term. Okay, that partnership might have been operating for 5, 10, 20, 30 years. And then the partners decide to retire. Okay, because the partners retire, the partnership will also end. Right, and then you'll have capital as being the important accounts to look at. Right, all of these accounts are T accounts. Okay, yeah, good question in the chat, Cheryl. If you can hear me on Zoom, you asked a question, what element is the current account? Okay, good question. Capital and current accounts are both equity accounts. So in other words, they're both capital in nature. They follow credit plus, debit minus. All right, they're equity accounts. So capital and current are both identical. The only thing different with those accounts is the one is looking more long-term and the one is looking at more short-term. But in terms of how they function, okay, they function the same as any other capital account. All right, so just relate that to capital. Okay, drawings is drawings is drawings. You will also have drawings, but just for two different partners. You'll have drawings for A, drawings for B, etc., etc. Okay, depending on how many partners you have. All right, this is something new that you might not have seen before. Okay, I think reserves was spoken about in the non-profits when you did 1502, and they talked about let me try to remember it now. A distributable reserve and a non-distributable reserve, something like that. Okay, you would have you probably recognize those words from the non-profits. It is covered in that section. Okay, this is not the type of reserve we're looking at though. Okay, so when you look at reserves here, okay, in disclosure for a partnership, these reserves are seen as an asset/equity portion, okay, from some sort of assets. All right, so sometimes you would put aside money, okay, for a particular purpose. And the same was covered in your 1502, where they talked about I forget the exact word, there's a term. Let me try to think of it now. It's where like you keep money aside for a specific purpose. Okay, and it's like a replacement. You want to replace an asset or you want to replace something. So you put money aside for that particular purpose, right? So a reserve here is exactly that. Okay, it's seen as a inverted commas asset slash equity line item, right? But important to note, who owns the reserve? The partners, right? Remember, what we have here are all partnership specific accounts. That's why we've got the heading here. Okay, each partner will have to account for their capital. Each partner will have to account for their current account. Each partner would have to account for their drawings. Reserves relate to the partnership. Who is that attributable to? The partners. Right, so the partners are actually entitled to that reserve. Okay, setting money aside for a particular asset. If I don't buy the asset, that money still belongs to the partners. Okay. You can have loan accounts here. Sometimes you have loans to partners and loans from partners. There's a message in the chat. Can you please define reserves? This is the definition. Okay, it's like an asset, but it's also viewed as equity. A reserve, if I had to give you a definition, would be like setting aside something for later on. Okay, a reserve. Think of driving a vehicle. Okay, and that reserve light comes on. Okay, when that reserve light comes on, you know you need to go top up or fill up your tank. Okay, because you still have fuel in reserve, but it's running on low. Okay, so a reserve here is just that. It's setting aside something for later on. Okay, so we set aside some fuel so we never ever run out of petrol. Okay, when that light comes on, we know. Get to a petrol station as soon as possible. Okay. Yeah, all right, so that's fine. Okay, so when we look at a reserve, it's literally resources that have been set aside. Okay, set aside generally for a specific purpose or set aside for the replacement of an asset or set aside in terms of profit. Okay, so keeping a certain amount of profit for a particular purpose. Right, and then the most important accounts, the one that you're going to look at quite a lot when doing calculations is appropriation. Right, again, related to something that you know. Profit and loss, you should know. Profit and loss is a T account. Okay, in a profit and loss account, the expenses are on the debit side. Okay, because expenses have a debit balance and income has a credit balance. Okay, so income will go on the credit side, expenses will go on the debit side. Why? Because you close off those accounts. Okay, remember, profit and loss is part of your closing transfers. Right, this only gets done at the end of the period. Same with appropriation. The only reason why they use the word appropriation instead of profit and loss is because you have multiple owners. And that's where the profit sharing ratio comes into it. Right, because we need to split the capital, okay, or the profit, I should say, to the capital for the partners. Right, here's just a few other notes on each of those accounts. Okay, I'm elaborating on each of them. So you saw the summary. Here's the detail. Do you split the loans? No, you don't. Okay, the loans are kept separate. So you could have a loan for partner A, you could have a loan for partner B, you can have a loan for partner C. Right, they're separate and they're specific to the partner. So if A takes out a loan from the partnership, A will owe the partnership. All right, they're not split. Okay, so profit is split, the loans aren't split. Okay, the loans are separate. That's an obligation that the individual partner would have to pay back in terms of their relationship with the partnership. Okay, yeah, good question. All right, so with capital, what will you see here? Same as before, we said capital is capital, capital always have a credit balance. Right, other accounts, this is something new that you haven't seen before. Okay, when partnerships sign that contract, remember we spoke about that agreement? Okay, if you sign that contract, sometimes, and if you look at the textbook, when you look at volume 2, okay, and you look at this chapter, they'll talk about the contract, the terms and conditions in the contract. Right, sometimes partners may include this. interest on capital. Because think about it. Remember we had this diagram here? Okay, let's assume A had 1 million and B had 10 million. Right, if B is going to contribute 10 million to the partnership, surely B should receive some compensation because he's given the partnership so much capital, right? And those are the things that you have to agree on when you sign the contract. Okay, so they might agree on paying interest on capital. Okay, and the reason why they do that is to incentivize the partners to contribute, right? So at least they can generate more funds, okay, so that they can operate and they can grow the business, right? So interest on capital is something that can come up when you look at those capital accounts, right? How would you view interest on capital? Well, inverted commas, it's an expense for the partnership. But remember, okay, is the partnership a separate legal entity? No, it's not. Okay, so because the partnership is not a separate legal entity, you can't view it as an expense. You're not going to show this on the statement of comprehensive income. Okay, it doesn't go in as an expense. Why? Because it's not a separate expense. Right? It's an expense that relates to who? It relates to the partners. Okay, the partnership. So where do you disclose interest on capital? It's disclosed in the statement of changes in equity because it's equity related. This is interest not on a mortgage. Interest on mortgage is an expense. Interest on capital is inverted commas, okay, an expense for the partnership, but it affects equity. Okay, so where will you show the interest on capital? It will be showed in the appropriation account because the partnership needs to pay for it. So the appropriation account is going to have to calculate how much interest is going to be attributable to each partner. Okay, all of this you'll see in a worked example, okay, when we go through one just now. Right, just remember you'll have partner A, partner B, partner C. Every capital account will be separate. Every partner will have its own individual account. Because it's a capital account, the balance will always be on the credit side. Okay, credit plus, debit minus for a capital account. Right, how does current account work? Same as capital. We spoke about it earlier, except it relates to short term. It relates to operations. Okay, operations meaning day-to-day running of the business, day-to-day. Okay, D2D, I'm just writing day-to-day. The disclosure, statement of change in equity. Right, you can see how important this is. The SOCI, right? It wasn't important in the past, but it's important now because you've got different types of owners. You don't have one owner, you've got multiple owners. And those owners are transacting with the business. Okay, they're going to have records of their transactions. Right, if they have a share of the profit, it'll go to their current account. Right, so if I make a profit, let me ask you, will a profit increase the current account or decrease the current account? What do you think? What would a profit do to a partner's current account? It would increase it. Good. Where would a current account increase? On the credit side. Very good. You see, basics are important. Right, it doesn't matter what I'm looking at. You follow the basics. Current account, same as capital. You follow the same rules. Okay, interest. If the partner is going to earn interest on their capital, that interest on capital is going to increase their entitlement. So it's going to increase their current accounts. If you have interest on current account, again, depending on what balance this has, can you have a debit balance for a current account? What do you think? Is that possible? Yes, it is possible. Very good. Okay, remember earlier we spoke about choose your partners carefully, especially when you're looking at business. You don't want a scenario where you're jointly and severally liable, okay, for debts of the partnership and you have an irresponsible partner. Okay, a partner can draw from the partnership, Right, so A can draw more from the partnership than B. Both A and B are liable to the partnership. So if A has drawn too much, it's possible for A to have a current account with a debit balance. Right, and then you can even charge that partner interest on the drawings. Right, so you're not only going to incentivize people for contributing capital, you're going to disincentivize people from drawing too much. Let me see. Where would you record a partner's loan? Okay, that's coming up. You'll see it. It's on one of the slides. Okay, so just wait a few minutes. I will discuss it just now. The partner's loans are also recorded, but they're recorded separately. Okay, that's the short answer to that question. Okay, but you'll see a note on it in your slides. Okay, anything else that relates to the partnership? Right, so if you're paying the partners a salary, if you're paying the partners a bonus, if you're paying the partners whatever it is, okay, it's going to go through the current account. Because what do we say current account is going to deal with? Operations day to day. How would you calculate interest on capital? Same as you would calculate interest on anything. Okay, interest on a loan, principal times rate times time. Interest on capital, same thing. The principal, which would be the capital, times the rate times the time. Okay, so the basic mathematics stays the same. Okay, it's always principal times rate times time. You just need to look for a balance, multiplied by the rate, and then take the time aspect into consideration. Right, there's nothing different here in terms of drawings. Drawings is drawings is drawings. Even for a partnership, drawing stays the same. It's used for private use, so just pick up on that when you read questions. Right, you'll see they'll be specific. They'll tell you partner A took something for personal use. Partner B took something for personal use. You'll also have separate drawings accounts. Okay, so each of these accounts representing different individuals. Okay, different partners. Okay, then there's the note about the reserve. Asset replacement reserve, that's the vocabulary that you will use when describing the reserves in this particular section. Right, you'll see it in some of the activities. Okay, what did we say this is going to be viewed as? It's going to be viewed as, inverted commas, equity / assets. Okay, depending on how they've recorded in the accounting records of the business. Right, it's normally equity because it's a reserve that's attributable to the owners of the business. Okay, it's viewed like an asset from the point of view of the business because it's a resource that the business has, but it's a reserve, meaning it's set aside for something specific. Okay, you do get different types of reserves. Some reserves are distributable and some reserves aren't. That we'll look at later when we look at a change in ownership, right, or a dissolution. Okay, that's how I've tried to explain what it is. Okay, so earlier you asked me, can I define a reserve? There's the note. Okay, inverted commas, it's like capital, it's equity, okay, but it's also money, so it's funds, it's cash. It's something that's set aside. All right, so depending on what you're looking at, if you're looking at the equity part of it, it's attributable to the partners. But then if you're looking at it from a point of view of a resource, then you would say, well, it's more similar to an asset. Okay, but just remember, the reserve is something unique and it's something that the partners have created for their partnership. That's important to note, right? So it's going to be viewed as their capital. It's their reserve. It's the partner's reserve. All right, there's the note about the loan. You asked me, how would you record a partner's loan in the business of the, or in the business, okay, in the partnership? Right, so if you have a loan from a partnership, the partnership will have a liability, okay? Because remember, you've got the partnership here, okay, partnership, all right? But the loan was given to A, okay, partner A, okay? So if you've got a partnership loan, if the loan was from the partnership must pay the partner. If it's the other way around, okay, if the partner has given the partnership a loan, then you've got a loan to partners. Okay, so you're either giving the loan okay, or you're getting the loan. It's a loan from or a loan to. It all depends on which way the money is flowing. Okay, so the partnership gets the loan. It's a loan from the partners. If it's a loan to the partners, then it's the opposite. The partnership is giving the loan to the partner instead of the partner giving the loan to the partnership. Okay, two different perspectives. Just look at what I've given you here. From or to, that's all. Okay, if it's from the partner, it's a liability. Okay, because you borrow from, right? Borrow, R-R-O-W. Okay, you borrow from, you lend to. Okay, so when you borrow, there's a liability. When you lend, there's an asset. Okay, you lend to assets. Right, so if I lend you money, okay, that's a loan to a partner. Okay, that partner is going to be viewed as an asset in the books of the business. Right, you asked about the disclosure. How would you record it? There's the record keeping. Okay, notice it's on the statement of changes in equity. Okay, that's where you disclose it. Okay, happy so far? The last thing we need to look at is this. The appropriation account. Okay, earlier we spoke about it. Here's a note about it. Appropriation, same as profit and loss. Keep it simple. Don't overcomplicate it. Right, what do you do in profit and loss? You calculate your income, you calculate your expenses, and you work out the difference. Okay, there's a note in the chat. Okay, your internet connection. Okay, let me repeat that then, if you didn't hear it. In a partnership, the appropriation account is going to split the profit or the loss between the two different partners. Right, what account will the appropriation account affect? It will affect the current account. Okay, not the capital, because it's day-to-day operations. Right, so any amount that is attributable to the partner will be attributable to their current account. It will affect their current account either positively or negatively. Right, when you look at profit sharing, you need to look at the ratio. Okay, so 1-to-1. If it's 1-to-1, hi Cheryl, are you okay? Oh, did you get kicked out of Zoom? Okay, so just to go through it again quickly, what I highlighted here in terms of the loan accounts, the loan can either be to or from, right, the actual partners. So if the partnership is what you're looking at, okay, if the loan is from the partner, okay, you borrow from, so if it's a loan from, it's a liability, but it's the partnership's liability. So it'll be disclosed in the statement of changes in equity. Okay, and then the other one is loans to the partners. Right, so if I'm giving a loan to a partner, okay, it's a partnership asset. So you disclose that in the statement of changes in equity. Okay, so those are the two loans that you get. Right, and then what I was saying here, in terms of the appropriation, is when you have an appropriation account, you need to first work out the profit and loss. Right, that profit and loss is attributable to the partners. And it's attributable to the partner's current account because it's the day-to-day running of the business. Right, so it's either going to increase or decrease their current account, whether they've made a profit or a loss. And that's where the ratio comes into it. All right, so if I have 1-to-1, okay, that's 50-50. So in other words, ratios are proportions, right? So 1-to-1 means 1/2 for the one partner and 1/2 for the other partner. Right, 50-50. 1-to-1, 50-50. If it is 1-to-2, okay, it'll be 1/3 to the one partner and 2/3 to the other partner. Right, so just make sure you can work with some fractions. Okay, ratios are fractions. Fractions are percentages. Okay, so 50-50, 1/3 is 33 1/3%. Right, as long as you are comfortable with fractions, you'll be okay with the profit sharing ratio. Right, the profit sharing ratio must be calculated in some instances, and sometimes you could even change the profit sharing ratio when we look at a change in ownership. Okay, the last bit here at the bottom is just highlighting the calculation. When you work out profit and loss, you need to add up all your income minus all your expenses. It's going to be calculated in the statement of changes, statement of comprehensive income, and then it'll be disclosed in the statement of changes in equity. Right, so two things to consider: the calculation and then the disclosure. This is important for the partners, because each partner is going to have to apportion their share of that profit or loss. Right, so how do we do that? Well, did I have a drawing here? No, I didn't. Okay, we'll see it in a diagram when I do an example with you. Okay, I'm just going to show a profit and loss here quickly. Okay, let's test your basics. In a profit and loss, okay, let's assume I have income of 50 and expenses of 10. All right, which side are you going to balance the account off on? How do you balance that account off? Do you remember? Do you remember closing the account? Do you close off the account on the debit side, or do you close off the account on the credit side? That's what I want to know. Just say debit or credit. Yes, good. Okay, you said debit in the chat. Correct. Right, so when you look at a profit and loss account, when you do the closing transfers and you close off this account, you can see that the income is more than the expenses. So what would you have done? You would have shown 40 there, and you would have put capital here. Okay, that is 1502. Right, so notice you're debiting profit and loss. If I try to working for this, I'm debiting profit and loss, and then I'm crediting capital. Right, so notice the same thing applies here. If the business makes a profit, you will credit the current account and you will debit the appropriation. Do you see that? Okay, if it's the opposite, let me draw another diagram. What happens if you have something like this? Okay, I'm going to draw it up here. Profit and loss. Okay, let's assume your expenses are 100 and your income is 50. Okay, what's going to happen here? Well, you're going to balance the account off on the credit side. Notice your expenses are more than your income. So you would have closed it off to your capital account. Okay, what happens to capital? You're debiting the capital account and you're crediting the appropriation. Right, because there's a loss that's shared. Right, so it's the opposite. Okay, so just remember, when you're looking at workings, those workings are always going to be provided for according to their contra accounts. Right, the contra account meaning, am I going to debit or credit the other account? Okay, so if a profit is shared, a profit will always increase the owner's entitlement. What is the owner's entitlement? The current account. So you would credit the current account. Same with the loss. Think about the effect. A loss will reduce their entitlement. So you'll debit the current accounts. Okay, there is a note here just regarding salaries and bonuses to partners. Okay, who is going to pay for this? Well, if you think about it, this salary or bonus is debited to the expense account, okay, and the partner's current account is credited. Why do you attribute it to the current account? It's because, inverted commas, it's given to the partners, right? Because anything that's in the current account is entitled or attributable to the partner, and the partner is entitled to it, right? So when you process the salary or the wage, okay, you always have two options, all right? During the year, you can have a partner that withdrew his or her salary, and if you had that occur, you could have processed it through drawings, or you could have processed it through current account. It doesn't matter. Okay, the point is, whether you're debiting the current account or whether you're debiting the drawings, the net effect is still the same. Right? The textbook actually describes it. It might be on a different page if you've got a more recent edition. Okay, but one of the pages in the textbook talks about this idea of paying out a salary, right? And they basically explain how whether you write off the salary to drawings or whether you write off the salary to current account, the net effect is still the same. Okay, you're either debiting drawings or current, or well, when I say or, it's or drawings. So drawings or current, okay, and you would have to credit the bank, okay, because you're paying out the salary or the wage. And I think that's it. Yes. All right. Now we can look at a textbook example. All right. So this week, to end, I just want to go through a worked example so I can show you exactly how to do the calculations. I've put some notes here for you when looking at study guide textbook examples. Right. Always remember good exam technique. Right. The first thing you need to look at is the required because of disclosure. The second thing you need to look at is what am I going to have to show in terms of financial statements. Right. So in other words, if I'm looking at a particular statement, I'm only going to look at maybe income and expenses if it's profit and loss. I might look at assets, liabilities if it's financial position. Right. And then the last step is to follow basics. Okay, the elements. Keep it simple. Okay, so let's show you how to do a worked example looking at this. Okay, if we go to your textbook, there's some theory here. They're even referring to the prescribed textbook just to give you a better understanding in terms of how the partners are or partnerships are created, how the partnership is structured. We spoke about the agreement, okay, that contract. It was those introduction slides that I had earlier. Okay. Separate legal entity or not, unlimited liability or not, those are things you need to consider. Okay, so that's theory. This will get covered in a separate chapter, dissolution. Let's find, okay, there's theory there that you can have a look at. Oh, here, appropriation, but I want a long question. There, financial statements of a partnership. Here we go, exercise 3.1. Here's one for us to try. Okay, let's write down, okay, this was study unit, let me just write down the section. This was sole proprietor. I'm just going to write sole prop. Okay, let's put another sheet here. Partners. Okay, this is study unit 3, okay, in the UNISA study guide. Okay, the numbering has changed slightly, I see. Okay, partners, study unit 3. Exercise 3.1. Right, so I'll do the first one, and then you can try do one of them on your own to see if it works. Okay, I can do another one next week if you need me to. Okay, remember, the progress is basically dependent on you. Okay, so if you're comfortable with the section, then we can move on. Okay, if you're not comfortable with the section, we need to go back and we need to look at it again. Okay, same with the second chapter. Okay, you're going to go look at 1 and you're going to look at 3. Right, 1 has been done for you in detail. 3 is the nice one that you can maybe do, and you can build workings for it, and then we can check workings and see did you get the same answer. Right, if you need me to go through more of them, just let me know. I can. Okay, so I'm going to go through this one with you. Right, exam technique, look for the financial year end. Here, 31st September, 30th September. What is the date? 2015. Okay. We've got blue-red traders. Do you see that? We've got blue and we've got red. Do you see that? Okay, second step. Look at the required here. What does the required want us to draw up? Lots of things. Okay, profit and loss and other comprehensive income. Okay, that's a template. We're going to take our template here. And the statement of financial position as well. Right, let's take that through to our Workings here. All right, that can stay. That must go. Okay, templates don't change, they stay the same. So we can use this. Okay, let's delete that. There we go. Okay, delete, delete, delete. Perfect. All good? Almost. Here. Delete. Great. Right, so those are two requirements. Statement of comprehensive income. Statement of financial position. And now we need a statement of change in equity. Okay, statement of change in equity, it's columns. So I'm going to do it on this side actually. So I can change the size of the columns. Okay, with the statement of changes in equity, okay, you'll have columns. Capital, capital, current accounts, drawings, drawings, appropriation. Okay, so when you have a statement of change in equity, you're going to have columns here. Okay, there'll be one column with descriptions. Okay, you'll write down what's happening. All right, and then you'll obviously show those movements in terms of equity. Okay, so this is what it looks like. And then there'll be a total column here. Right, normally they'll have balance at the beginning. Okay, beginning of the year. Okay, and then obviously balance at the end of the year. Okay. What else? Okay, notes we're not going to do. Okay, unless it's a PPE note. Okay, we'll look at notes when we do past papers. Okay, because notes aren't generally asked for. They're asked for in the textbook because the textbook is giving you everything. Right, but when you actually look at past papers, you'll see notes in this module don't often come up. If it does come up, it's probably going to be a note for PPE. Right, and that's about it. Right, other notes aren't generally asked for. Okay, so don't worry too much about that. You can look at the notes that they've prepared for you, not something that's generally asked for. And then what do they want? Okay, and then they want the T accounts, the general ledger T accounts, right, to show the closing off. Right, the closing off we can do, right, just to show the debits and credits in terms of current accounts so you know how that operates. Right, but most important is the disclosure. That's important. Make sure you get the disclosure right. Right, so I'll do the disclosure first, and then we can discuss the current accounts just so you can see how those current accounts are operating in terms of the appropriation. Okay, so now we've got our templates. We've got everything, right? 3.1. Good exam technique, go to the beginning. Here's the beginning. Go down the list, put it where you need it. Okay, first one, capital blue and red. Remember, those are capital accounts. Maybe do this with me as we go through it in pencil. Right, if you've got a hard copy of this, then just write in pencil next to each of these so you know where I'm putting what. Okay, capital we know is owner's equity. Where does that go to in terms of disclosure? Statement of changes in equity. Right, so we've got blue and we've got red. Right, what did they give me in the question? They gave me balances as at 30th of September. Is this before or after adjustments? Let's read. Under the above accounting records as the part of the financial year. Okay, that's fine. They've just given you balances here. Do I have adjustments? I do have adjustments. I would probably assume that this is the end balances unless we are told otherwise. Okay, so there's no brackets. So this is the capital, okay, before we've calculated profit. So in other words, before we've apportioned the profit. Right, so this capital is the amount that is attributable to the owners that they've given to the partnership in the past, and they still have that capital today. Okay, because of the dates, I'm just going to put that here at the bottom, end of the year. Okay, blue had how much? Blue had 20. Red had 5. Okay, current account. Okay, notice there's a date here. 1 October 14. Okay, beginning or end? Beginning. So this has to go here at the beginning. Right, the current account for blue. Okay, let's put in blue and red again. I'm just going to put B and L, not L, B and R. Okay, there's B. And there's R. Okay, so current account for blue. What is blue? Blue is a credit balance, hey? If it's a credit balance, it's favorable. So it will be a positive balance. What is the amount? 1060. Okay, red is 2,800. There's red. Do you see that? Okay, this is exam technique. Right, when you're writing your exam questions, get marks as you go. Okay, draw the templates up first, right, and then put everything through to your disclosure. Right, drawings blue and red. Again, check the date. This is for the end, so 9 and 3. Okay, it's a mortgage. Okay, maybe give me some answers in the chat. What is a mortgage? Let's test you. What type of account is a mortgage? Good, liability. Right, so mortgage goes here. In brackets, how much? 10,000. Okay, trade payables control. What is it? Liability. Good. Trade payables in brackets 24,150. Okay, yes, current, very good. Yes, good disclosure. Right, bank overdraft. Current liability, good. Amount 6160. Land and buildings at cost. Asset, good. Okay, this would require PPE notes. Right, remember, if it's on the face of the statement of financial position, I'm not going to draw a note because then I need to reference the note separately. I'm going to disclose it on the face as a separate line item. Okay, in brackets, 19,500. Right, the reason why I'm showing it on the face is in past papers, they don't often ask notes. Right, you're not going to have to draw up a PPE note. If they do, it'll be a separate question on its own. Okay, they normally ask you to draw up those statements, so it's better to show them separately. Right, equipment at cost, same thing. Easy one. Bracket, how much? 19,840. Right, what is accumulated depreciation? Do you remember what this is? Negative asset, good. Okay, it goes against the equipment. Minus, what was it? 5,000. Okay, motor vehicles you should know is this. An asset again. Motor vehicles in brackets, how much? Motor vehicles, 900. Right, accumulated depreciation, same thing. Negative asset, minus. Lots of assets and liabilities here. Well, assets and depreciation, I should say, not liability. Negative assets. Right, next, office furniture. Ooh, some more. See, lots of non-current assets here in this example. Okay, it would have all have gone to a PPE note. You'll see the PPE note later on probably because they spoke about it, so they probably have it as well. Okay, which one was I on? Furniture. Okay, in brackets, amount, 350. Now, just double check I'm reading the right line. It's a bit difficult for me to judge which line this is on, but I'm trying my best. Yeah, just double check if you've got a ruler or something that you can just put on your textbook or your study guide. Okay, depreciation 50. Accumulated, minus 50. Right, next, inventory. What is that? That's something I can ask you. Current asset, good. Okay, just open your closing stock. This is closing stock, 30th of September 2015. Amount 21,069. 21069. Okay, trade receivables, debtors. We saw it earlier in one of the other examples. Right, in brackets, how much? 16,020. Ooh, typo, be careful. 16,020. 16020, yes. Okay, allowance for credit losses. It's an allowance. You offset that against your trade receivables, okay, or your debtors. Right, so the allowance for credit losses at the beginning of the year was 600. Okay, there's the allowance. Notice I'm minusing 600. I'm getting marks for disclosure. Right, petty cash is another current asset. In brackets, 32. Right, sales. Okay, there's income. There's sales. Sales is 340628. 340628, great. Okay, what else do I have? Cost of sales. Okay, this is a trading entity. They're buying and selling. Okay, 306,000. Okay, what else do I have? Advertising costs would be part of other expenses. Advertising, how much? Advertising costs, 4409. Okay, salaries and wages, another expense. Right, these are easy to identify. These should be okay, right? 12189. Okay, admin expenses, the word is there, expense. Okay, admin, I'm just going to use a short script. Okay, 2622. Okay, insurance, again, another expense, brackets, 364. Okay, carriage on sales, that's delivery cost for sales. It's not related to inventory. Okay, so carriage on sales is separate delivery costs. Normal delivery expenses, other expenses. 203. Interest on mortgage is a financing cost. We're just going to disclose it separately. $450. Right, there's your easy marks. Right, have I looked at all the balances? Yes. Now I just need to go through each and every one of these points. Right, so look at point number 1.1. The partner share profits and losses in the ratio of their fixed capital contribution. Okay, highlight the capital contribution. It's in the statement of changes in equity. Now I can put a little note here for myself. Profit sharing ratio. Is, what did they say? In the fixed capital contribution. So it'll be B, B2, B2R. Okay, blue to red. Is 20,000 or 22,500. Okay, 20 to 5 is the same as 4 to 1. Okay, 4 to the 1 is same as blue gets 4 over 5. Red gets 1 over 5. Okay, do you see how I worked that out? All right, it's in their fixed capital contribution, right? Okay, is that all right? Hopefully. If you have any questions, let me know. This was 20 to 5. Okay, 20,000 to 5,000, right? So I just divided both sides by 5. So I had 4 to 1. Okay, 4 to 1, 4 over 5, 1 over 5. Right, so I'm happy with that. Move on. 1.2. Interest at 5% per annum is to be allowed on the opening balances of the partner's capital and current accounts. Okay, we need to put a question mark here because we don't know if these end balances, did they change during the year or not? Okay, it's uncertain. We don't know. Okay, but we know there's going to be interest on capital, so we need to put that in. Interest on capital. Remember we said in our notes, interest on capital is a partner-specific transaction. So it will go to the SOCI, okay, the statement of changes in equity. Right, we don't know what it's going to be. We know it's going to affect appropriation. I'm just going to put X's there, okay, and we know it's going to affect interest on capital will affect their current account. Okay, it's an entitlement. All right, we'll get those amounts later on. We know we have to put it in. We know it's 5%. Let's write that down. 5% of opening balances. Next, interest is to be charged 5% per annum on the average monthly amount outstanding on the partner's drawings account. Okay, so we had interest on capital. You've also got interest on drawings. Interest on drawings is also 5%, hey? Yes. Copy paste. Opening, is it opening balances? Charge 5% per annum on the average monthly outstanding. Average monthly? Okay, do they want us to work out a monthly average? That's interesting. That's the first. Okay, seeing that. That's more detailed mathematics. Okay, I'm just going to write down drawings for now. We'll see it later on. If we get an average, so in other words, if we've got lots of drawings figures over the whole year, then I can work out a monthly average. But right now, I don't know what's given. Okay, but I've read it. I know I'm going to have interest on drawings. Interest on drawings will affect current and will affect appropriation. Okay, because the partnership needs to compensate for those amounts. Okay. Right. I clicked. Let's go back. Okay, the next one. Red is entitled to a salary of 1,000 per annum plus a management commission of 10% of the comprehensive income for the financial year after his salary and the adjustments for the interest on the capital, current, and drawings can have been taken into account. Okay, so we have salary, partner's salary. Okay, who pays the partner's salary? The partnership. So you're going to need something here. Okay, in the appropriation account, we actually know what the amount is. We can show it actually. Right, how much needs to come out of appropriation? Appropriation is going to pay for 1,000. Okay, that salary is going to increase whose account? Red's account. Okay. Red's account is going to go up by 1,000, positive. Okay, it's a credit balance, so it's positive. Appropriation, show it, minus. Okay, don't forget, it's a debit. The debit here is a minus, the credit there is a plus. Okay, because I'm looking at equity, owner's equity. Right, what else do I have? I've also got a commission. Commission of 10% of, okay, then asterisk. Okay, what is the asterisk for? The comprehensive income for the year after his salary and adjustments. Okay, so in other words, 10% of profit after all adjustments have been taken into consideration. Okay, so do I need a calculation for profit? Definitely. Okay, note here at the bottom, profit calculation. I'm going to have to work it out. Okay, and then I'm going to have to take 10%, hey? Yes, 10% as the 10% of the profit as a salary. For who? For the same person, looks like it. Yeah. Red is entitled to a salary plus a management commission. Okay, this was commission. No wonder it's different. Okay, the one was salary, the one is a commission, right? They are different things. I thought they were the same. Okay, just read carefully. All right, here, adjustments. Outstanding debt of 20 Rand is irrecoverable and must be written off. Okay, Cheryl, I want the debit and credit. Give me the working. Workings are everything. Debit, credit, loss, credit, trade, receivables. Perfect. Good. See how easy that is. Okay, if you've got the basics, then you'll know where to put it. Right, add to your basics there. Debit, credit, loss. What is a credit loss? It's an expense. So expenses get disclosed here under other expenses. Do you see that? All right, so in brackets, 20 Rand. Okay, your credit, you said, is for trade receivables. You should know it's an asset. Where do I disclose assets? Here, financial position. Trade receivables, there, write off 20. Okay, do you see how important it is to get the working? You've got the working, you know where to put it. Okay, you have to capture both the debits and the credits. Next one. The allowance must be adjusted to 800. Let's go look at the allowance. Here's the allowance. I'm going to highlight it. Okay, can you tell me what to do? Debit or credit? Here's revision. How do we adjust for the allowance? Let's see if you remember last week's content or the week before. I can't remember when I covered it, but we looked at it. Let's see. Anything yet? Okay, still busy typing. Debit, credit, loss. credit the allowance. Very good, impressive. Okay, so notice you're dealing with an allowance here. An allowance has a credit balance. It might even be given here. No, okay, it wasn't. Okay, this is just one column. Okay, if it's one column, you need to know if it's a debit or a credit. Okay, so how do I increase the allowance? By crediting it. So debit the credit loss, debit the allowance. So what am I going to do here? I'm going to show a bracket. Okay, this 600 needs to go up to 800. So plus 200, close brackets. Do you see that? See? There's the allowance. Okay, that 200 is going to be a debit for the expense. So the credit loss plus 200. Close brackets. I'm going to highlight that in red. Okay, that's tricky. Right, depreciation is to be provided as follows. Okay, so let's go to our equipment. Equipment is an asset. There's our equipment. 15% per annum according to the diminishing balance method. All right, so copy that. Minus, open brackets, paste, times 15%, close brackets. Okay, that's depreciation. Remember, you had the cost and you had the accumulated. The depreciation will be calculated based on carrying value. So minus the 2, then times 15%. Do you see that? Okay. Where else am I going to show that? Here. Depreciation. Okay, for equipment. Brackets, brackets, paste. There we go. Okay. I'm going to need more lines here. Next, new machine was purchased on the 1st of April. Okay. A new machine was purchased. So now we need to provide for that. Okay, this new machine, what is this new machine referring to? It's not a vehicle, it must be equipment then, hey? Do you agree with me? Must be equipment, right? Okay, so if it's equipment, we also have to have pro rata equipment as well. Okay, so, yeah, equipment, I agree, yeah, so plus. In brackets, okay, new machine was purchased, 1st April, 1560. Okay, times that by the 15% per annum. Multiply that by pro rata. Okay, what is our year end? 30 September. So let's count. April to September is how many months? Let's count. Count together. Use your fingers. April, May, June, July, August, September. You counted 6. I counted 6 as well. Good. Same page. Perfect. Times 6 over 12. Close brackets. There's my working. Okay, there's more depreciation. That depreciation, copy, needs to be taken off your assets. Minus, paste. Right, remember, you know your T accounts. Not your T accounts, your workings. Okay, in terms of debits and credits. You debit depreciation, you credit accumulated depreciation. Here's my credit. There's the depreciation. Okay, there's my debit. There's the depreciation. Right, motor vehicles, 20% using straight line. Okay, that's easy. Right, so there's motor vehicles. Okay, subtract open brackets, costs, times 20%. Right, there's depreciation for motor vehicles. Copy that. Depreciation is an expense. Don't forget to disclose it for motor vehicles. Right, there's the depreciation. Okay, what else do we have here? Office furniture, 10% per annum according to diminishing balance. All right, so where's my office furniture? Here. Again, copy paste. Minus, open brackets. Show the working. Okay, what is the rate? 10%. Close brackets. I think I might have too many brackets there. Yeah, that's right. That's better. There we go. Depreciation. Copy. Right, so there's the accumulated depreciation. That's for the furniture. I now need to show that here as well because of the expense. Every debit has a credit, even with disclosure. Depreciation, okay, for furniture, brackets, the amount. Okay. Have we looked at everything there? Yes. Right, 2.4. Interest on the mortgage up to 30th November amounts to 600. 4,000 of the loan is repayable during 20.6. Okay, that's next year. That's disclosure. Right, remember, you need to disclose short-term loans from long-term loans because you have current liabilities and you have non-current liabilities. That's a disclosure line item. If you're following, you can highlight that. Okay, the loan is secured by a mortgage over land and buildings. The loan was granted by Corner Bank on the 1st of October, 20.14. The terms of the loan provide for interest on the loan to be charged at a rate of 6% per annum. Okay, so the first thing we need to work out is the interest. Let's go work that out. Okay, where's the mortgage? Here. Interest on the mortgage equals, okay, the principal is 10,000. The rate, 6%. The time, do we have a full year here? Let's go check. Yeah, we did. Okay, this was 1st October 20.14. 20.14 would have been last year. Let's check. Yeah, 1st October is the start of the year. Start of the year is October. 1 October is the start. October, let's just double check. So September, October. Yes, that's right. Okay, so October is the start of the year. 1st October is the start. 30th of September. 15 is the end. Okay, so we've had the loan for the full year. So we don't have to prorata it. Okay, what is 10,000 times 6%? 600. Okay, same answer as the one that they've given us. Interest on the mortgage up to that amounts to that. Okay, great. Have we paid this interest? They're not specific. Okay, notice nowhere here do they tell me I've paid the interest. So I can assume that this is a accrued interest expense. Okay, in brackets, 600. This will affect the interest. Where's my interest? Here. Okay, did I have interest here? I had interest on mortgage. Do you see it? Oh, okay, here. Interest on mortgage is 450. What should it be? 600. Add 150. Do you see that? Okay, this is the accrual. I'm going to highlight that in purple. Right, go down to the bottom. Be careful. Don't make this mistake. Okay, the accrued interest expense is for the difference. The 150. The purple. Right, because we can check it in our statements. Right, that's why I like doing it this way, because you can see what you've already captured. Right, the accrual needs to be 600. What have I recorded? 450. The interest needs to go up by 150. Right, so debit the interest expense, credit the accrued interest expense. Are you still with me with that one? That one's quite tricky. Does that one make sense? Are you okay with that? Okay, great. Okay, have we looked at everything? Just the disclosure of the loan. Okay, 4,000 of the loan is repayable during 20.16. That's the next financial year. That's within 12 months. So in terms of disclosure, IFRS says I need to distinguish between long-term and short-term liabilities. So I'm going to subtract 4,000 here, and I'm going to show a short-term portion of the mortgage. There we go. Okay, that's a disclosure line item. That's easy mark. That you get marks for nothing, basically. Okay, it's just remembering short-term and long-term. Right, have I read everything? I've got the interest. I've got the disclosure. Great. Okay, 2.5. Salaries to employees of 69 have not been paid or taken into account. Okay, this is an accrued expense for normal salaries and wages. Not to the partners, though. Be careful. Those are normal employees. All right, so I'm going to debit the expense and credit the accrual. Okay, where's my salaries and wages here? I'm going to show plus. How much? What is the difference? 69. Okay, that's not a lot, but it's something. Okay, 69, I need to put it in. Okay, let's go add it here at the bottom. Accrued salaries and wages, 69. Okay, next, 2.6. The following expenses have been prepaid. Prepaid expenses are assets. So you debit the prepaid expense, you credit the insurance, you credit the advertising. See how important it is to understand the workings. Okay, if you're crediting the insurance, you're reducing it. All right, let's first show the prepaid expense here because I've got it here. There, current assets. Let's write it down. Prepaid expenses. I'm going to show the two together. In brackets, I'm going to show the insurance of 62 plus the advertising of 948. Okay, do you see that? Right, this is a debit for prepaid expense and it's a credit for the expenses. Both insurance and advertising are expenses. So if I'm crediting an expense, I'm decreasing the expense. Where's my insurance? Here. Minus 62. Where's my advertising? Here. Minus 948. Okay. Do you see it? It's there. Okay, what else? We've got two more. 2.7. Interest correctly calculated on the partner's average monthly drawings account amounted to that for blue and that for red. Okay, be careful. This is interest that doesn't belong to the business, it belongs to the partners. It's not a normal expense that you would show here. Interest on mortgage goes here. Interest on drawings or interest on capital doesn't. Interest on capital and drawings goes here. SOCI, statement of changes in equity, because it's partner specific. Right, as long as you can remember what's partner specific and what's business, you can't go wrong. If it's partner specific, it goes here. If it's business, it goes on the other side. Okay, so let's write that down. Interest correctly calculated on the partner's average monthly. Okay, so see, I didn't have to work out the monthly. Okay, I was worried about that because then they had to give you 12 months worth of information, but they didn't. Okay, they gave you the final working. Okay, so that does help a lot. So we can just record it. Okay, let's show it. Here, interest on drawings. Okay, the interest is how much? This is interest on drawings. So if it's interest on drawings, it's going to decrease their entitlement because they have to pay the partnership this amount. Okay, so interest on drawings will be a minus 320 for blue. Okay, and 80 for red. Okay, notice, this is something new. I'm going to highlight that. Okay, interest on drawings is bad for the partners because it reduces their entitlement because they have to pay the partnership the interest. If the partnership is getting the interest, the appropriation account is going to go up. All right, so this must be a positive figure, because every debit has to have a credit. Right, so if you are, interest on drawings would have been a debit. If you're debiting those current accounts, you must credit the appropriation. If you credit the appropriation, you're going to have more that can be shared amongst the partners. Okay, hopefully that made sense. That's new. Okay, that you might want to go back and look at again later on. Right, and then the last point, 2.8. In terms of the partnership agreement, the following must still be provided for. Interest on the partner's capital, we have that. I know I still need to provide for that, 5% of the capital balances. Red salary and management commission. Red salary, we did process red salary, but the commission we still have to process. Okay, but I need the profit to do that. Okay, awesome. All right, so interest on capital. Did I read anywhere in the question that the capital balances had changed? No. So what I had at the beginning is the same as what I would have at the end. Okay, had they told me that red and blue had made more contributions during the year, then I would have had additional capital contribution. Right, but did they say anything about additional capital? Zero. Nothing. All right, so no capital. So what they had at the start is the same as what they had at the end. Okay, so can I work out the interest on capital? Yes, I can. What was it? It was 5% of the opening balances. So for blue, it's going to be this amount times 5%. Okay, for red, it's going to be this amount times 5%. Okay, think about this. Think about it in terms of the partnership being separate. Okay, remember, is interest on capital good for the partners? Yes. They are going to get more in terms of their entitlement. But now who has to, inverted commas, pay for it? the partnership has to pay for it. So the appropriation account will have a minus. Right, so if you have pluses here, it'll be minus 1250. Okay, that's very important. That's new. Right, before we can work out the capital contribution, not capital contribution, before we can work out the commission, okay, remember the commission was for who? It was for red. We need to put a question mark here. Okay, question mark there. Right, let me double check that. It was for red, hey? Yeah, red, 10% of salary. Yes, it was for red. Okay, the salary for red we've got. Yes. Okay, great. I'm going to make this bigger. All right, let's sum up and let's sort out all the totals. Okay, there's my sales. There's my cost of sales. Okay, just remember, Cheryl, you need to show this as a negative. Right, remember, I can't show this in a bracket. Okay, look, if I put a bracket here, have a look at what the Excel does. Look, there's a bracket. It makes a negative. Right, so remember, negatives are shown in bracket. Then you need to add and subtract. Okay, there we go. Subtract. There's the gross profit. Did we have other income in this question? 0. Okay, we've got lots of adjustments here for the expenses. Okay, depreciation, we need to calculate all these amounts. Okay, there's the total. Right, for this one, and this one. There we go. Other expenses equals sum, add up. Okay, there we go. We've added everything. Right, so what do I have? I've got a profit that is going to be the gross profit plus no other income minus the other expenses. Okay, just remember this needs to be a negative. Okay, remember, you need to show that in brackets. Right, so this minus that, profit, 12,409. Okay, this profit is going to be referenced in the statement of changes in equity. Okay, because it's a disclosure line item. Right, so let's go to our SOCI. Okay, we need to show that here at the top. Profit for the year. Right, so how much can they share? They can share 12,409. Okay, highlight that. Right, so now we need to work out this additional capital, not additional, this commission. Okay, so this commission is going to be worked out here. Okay, this is the distinction part of the question. This is the tough part. Okay, so to work out this commission, you need to work out how much profit is available. Well, this is the profit that's available. Okay, then you had interest on capital. Then you had interest on drawings. Then you had partner salary. Okay, so let me just write these things down. This is the interest on cap. Okay, this is the interest on drawings. And this is the salary. Okay, and that's obviously the profits. All right, so what is the updated figure? Let's see. Okay, this plus that plus that plus that. There we go. All right, so 10,559 is the profit that is going to be used to calculate a 10% commission. Right, times 10%. All right, gives us that answer. Okay, I'm going to leave it as rands and cents. Okay, 90 cents. All right, so we need to show that. Commission, what is the commission going to do? Okay, the commission is going to increase Red's account. So 1,055.90 cents. Okay, this is going to be subtracted from the appropriation. Okay, in other words, it'll come out of the profits. Right, so we've got everything. Yes. Okay, the last thing we need to do here is work out how much profit is going to be attributable to each partner. Right, so we need to work out how much is left over. Okay, so remember, that's the amount that we have currently. Right, that's the amount of commission. Okay, so the net amount to be shared is... Okay, so the net amount to be shared will be this minus that. Right, so that amount will be shared, and will be shared according to their profit sharing ratio, which we said was 4/5 to blue and 1/5 to red. All right, so this will be that line over here. Okay, this will be the appropriation of profit. Okay, you're going to show negative that figure, right? And then you're going to split it. So blue's going to get this amount times 4/5. Okay, and red's going to get this amount times 1/5. Right, and if you've done it correctly, the appropriation account will always land up with the balance of 0. Have a look. Okay, because why? You basically split it out. Okay, you split out what the partnership is generating in terms of their operations. Okay, so the partnership has generated 9,503,10, which is going to be shared between those two partners in their profit sharing ratio. Right, oh, wrong. I've put this on the wrong side. Let me just copy the amounts. Sorry, it's current account, not capital. I wrote it down in the wrong column. There we go. Okay, it must go in those columns. Right, and then I need to tally up their columns. Right, so if I sum up that column and I sum up that column, okay, I'm going to get the balances. Ooh, wrong line. There we go, that side. Right, balance at the end of the year, those will be the balances. Right, where do these balances go? These balances go in your statement of financial position. Statement of financial position. Okay, so I'm going to take those balances and I'm going to reference them on the face of the statement. Here, equity. I'm going to show capital. I'm going to show current accounts. And I'm going to show drawings. All right, the capital is going to equal the sum of those two amounts. Okay, the current account is going to equal the sum of those two amounts. Okay, the drawings is going to equal the sum of those two amounts, the drawings. Okay, so I'm just referencing those amounts. Okay, capital, those two, current, those two, drawings, those two. I'm adding the totals, okay, because that gets disclosed at year end. Okay, so if you go here at the bottom, there's my capital, there's my current account, there's my drawings. Can I work out my equity? Yes, equity will be the sum of those three amounts. Okay, there's my equity. Right, let's wrap up here. Okay, so 19,500. Equipment, we need to tally up the equipment. Okay, we need to tally up the motor vehicles. We need to tally up the furniture. Okay, inventory, trade receivables, tally up. Petty cash, prepaid expenses. Okay, your non-current assets sum up. All my non-current. There. Current assets sum up. All my current assets. There. Total assets sum up. Non-current and current. There's the total assets. Okay, so now we need to check. Let's see if we've got it correct. Does it balance? Let's see. Okay, copy paste. Long term, 6,000. Short term, 24150, 6160, 150, 4,000, 69. Okay, current liabilities, if we sum up the current liabilities, we get that total. Okay, total liabilities, non-current plus current, gives us that. Okay, then I need to add up equity plus liabilities, gives me the same answer, and that's what you want to see. Okay, if your total assets equal your total equity liabilities, you haven't made any mistakes. All right, hopefully that helps. Let's have a look at their solution to see if we agree. Okay, let's go back to the beginning. I'm just going to shrink this a bit so we can see what's on screen as well. Okay, where's their solution? Here. Okay, their revenue. Revenue's fine. Right, okay, see, this is what I'm talking about in terms of disclosure. Right, distribution, admin, and other expenses. I just put them all under one heading. Right, obviously, use what they've got here. If you need to differentiate your disclosure, then you can just add up what you need to get the same figure. Okay, everything that they've got here, we should have here as well. What is their total? 12,643. Ooh, not the same. But it balanced perfectly. Let's check why. Let's see. Okay, so let's go through it. Let's check the first one. Salaries and wages, same amount? Yes. Advertising? Yes. Delivery expenses? Yes. Admin? Yes. Insurance? Yes. Credit losses? 220. Where's my credit losses? Yes. Depreciation. Where's my depreciation? Here at the bottom. Okay, they added them all up, hey? So if I add them all up, what do I get? I get 2553. What did they have? They had 2319. Okay, their depreciation is wrong. Okay, they have a note here. Note number 2.1. Okay, let's go look at note number 2.1. I don't agree with their depreciation line item. Let's see. 2.1. Here's depreciation. Equipment 15%, I used 15%. Motor vehicles 20%, I used 20%. Furniture 10%, I used 10%. Diminishing balance, I used diminishing balance for the 2 and I used straight line for the 1. Yeah, that's right. Let's see their working. Is there any other working here that we can look at? Is there a property, plant, and equipment note? Yeah, here's the note. Right, what was their depreciation for equipment? Equipment they went with 219. Okay, we didn't have that. Okay, so here's the discrepancy. Let's see what Eunice is saying for the equipment. Okay, Eunice is saying we should go with 2109 for the depreciation for equipment. Let's go look at the equipment again. Okay, the equipment says in the question, depreciation is to be provided as follows. Equipment 15% per annum according to the diminishing balance method. A new machine was purchased on the 1st of April for that amount. Okay, let me check the trial balance. What did I have in the trial balance? The trial balance had equipment at cost. Oh, okay, I see it. All right, this is why. Okay, I see why. All right, equipment at cost, it's for that period, end of the year. Okay, so if it's end of the year, all right, so I actually need to change this working. Right, let me show it to you. Here, equipment. I should have drawn a diagram. Okay, NB. Right, I normally do, but obviously I didn't. I was lazy here. Okay, should have drawn a diagram. Should have drawn a diagram. Okay, so don't be lazy. Draw a diagram. Okay, you can see if you're lazy and you don't, then you get it wrong. Okay, so if I should have drawn a diagram in terms of the year end. Let me copy paste. Okay, that's the year end. Okay, in the question they gave you the equipment at year end, and they told you that was the 19840. Okay, so obviously the beginning would have been September, October, hey, October 2014. Okay, that would have been the start. All right, and then in the question, let's go back to the question. The question said that a new machine was purchased on the 1st of April 2015. That was the 1560. Okay, so what was the date again? April. Okay, 1 April 15. Okay, buy new. All right, 1560. All right, so if you draw the diagram, you can see that the start balance needs to change. That's why I don't get the same answer as them. Okay, be careful. All right, it was a mistake. I should have looked at this, okay, and as a diagram. Right, if that's the balance at the end, the balance at the start would have been the difference. Do you agree? That minus that. Okay, so in actual fact, you only would have used 18280 for this line item here, this one. Okay, because here's the 1560. Do you see that? Okay, so this needs to change to 18 to 80. Enter. Okay, I'm going to put that in red or underline it. Red, underline. Okay, that amount needs to update. All right, then everything else will reference. Okay, there, that updates. All right, let's just check our depreciation here. This one needs to change here. Okay, what is it? 18 to 80. 18 to 80. Okay, so there. 12409. 12409. Was that what they got? Let's see. Where's it? Here. Ooh. Oh, okay. Copy it. I changed the working here. I need to change the working there. There we go. Paste. All right, there's it there. Okay, see, 12643. 12643. Okay, so I agree with their solution. Their solution's correct. Just be careful of that date because they gave the end. You've obviously got to work out the beginning. All right, so that will update. If that updates, does the rest change? Yeah, the rest would have changed as well. But I think it automatically updates because I was using formulas. So I think everything is still fine here because I referenced that and then I subtracted. It should be okay. Let's just check the rest here. Let's go look at the rest there first. Statement of financial position. Are we happy with the statement of financial position? Are we happy with the statement of changes in equity? Let's see. Okay, here's the statement of changes in equity. Opening balances, capital, yes. Happy with that column, happy with that column. This column's fine. The 10,000, not 10,000, this one, that's fine. There's the interest on capital. Okay, they've got the salary. I've got the salary. I've got the interest. Okay, interest on the current accounts. Why do they have interest on current accounts? Did they say that in the question? I don't remember reading that. Do you remember reading interest on current accounts? Where do we see interest on current accounts? Oh. Be careful. Overlook that. Okay, 5% interest on the capital and the current accounts. Did I write down only the one, not the other one? Let's see. I've got interest on capital. Okay, I did leave out interest on currents. Sorry, my mistake here. Okay, I read it. I only looked at capital, forgot currents. Stupid mistake. Let's fix it. Okay, so we've got it on screen. Interest on current accounts. Okay, it's just the balance, whatever the balance is. There's the balance. Take the balance times about 5%. Okay, take the balance times about 5%. All right, the question said interest on capital and current accounts. Okay, I do need to include that. That is important. Okay, that does need to be included. Missed that. Okay. All right, let's go back. Anything else? Okay, happy with that, happy with that, happy with that, happy with that, happy with that. Interest on drawings, that was fine. The commission, has that updated? The commission is different. The profit, the drawings is fine. Okay, the drawings, they've closed off to current. Okay, I would keep it separate and then disclose it on the actual face of the statement. They've just written off the 9,000 and 3,000. I'm not going to change that. That's fine. Leaving it separate is correct. The drawing should be separate to current, unless you're dissolving this form of ownership, okay, which you're not. Okay, it's an ongoing business. All right, so I do need to update my workings because of the change here. Okay, let me just double check. Okay, there's the right profit. Okay, that figure needs to go there. That's the right figure. All right, then I've got the interest on current. Okay, interest on current is going to increase. I'm going to show a minus here. Minus 53, minus 140. Okay, because I didn't include that initially. Right, that was something that I had to include. Okay, interest on currents. Right, the current accounts, we said it was going to be, it's going to be a minus because they're getting the benefit, we have to pay for it. So it's going to be it's a negative, so that figure there. Okay, and then if we update the formula, this plus that plus that plus that plus that gives us 10,600 times 10% gives us that figure. This figure was the commission, so that would be minus there. Okay, the commission will be given to that partner there. Okay, and then we need to look at what's left over. Right, the net amount, this minus his commission is going to be that figure. Right, that figure needs to then be apportioned. Okay, so times 4 over 5. Right, and then this one times 1 over 5. Oh, why is it not working? Oh, there's a negative there. Okay, times 1 over 5. 1 over 5, enter. Oh, didn't work. Try again. Equals this times 1 over 5, enter. There we go. Right, is that better? Yes, okay, that's better. So yeah, it was the current account. Yeah, sorry, when I read it, I omitted that current account. I should have been more careful in terms of the actual working. Okay, I didn't cover, I covered the interest on the capital, but I don't know why, I just overlooked the interest on the current. Okay, yeah, their solution's fine, nothing wrong with the answer. Happy with their answer, and we've checked it as well. Okay, we've gone through it in detail. Right, is there anything else here? Oh, yes, the statement of financial position. Okay, let's check out disclosure here. Oh, let's go across. Right, when we did this, land and buildings, okay, they've grouped it all as one. We need to look at the note. Here's the note. Okay, what's the balance for land and buildings? 19,500, it's correct. Carrying value for equipment is 12,731, that's correct. The motor vehicles is 220, that's correct. The furniture is 270, that's correct. And then if I total it, the total was, why isn't the total right? I did add up everything, equals sum. Sum up all of that. Okay, I'm getting that total. Hold on. This figure, did I update this figure? Oh, okay. What's in red here? Okay, so again, I wrote that in. Highlight that. Okay, I changed the working, didn't change the answer. There, paste. All right, that was the cost. Okay, what we said, the timeline. All right, so that was there. Okay, there you are. Then that's right. Okay, that was the total that had to update. Okay, so that's fine now. Let's go look at the current assets. Down, up. Okay, disclosure-wise, do they have all those current assets? Let's see. Inventory, yes. Trade receivables, yes. Prepayments, yes. Petty cash, yes. Okay, they've just used the note for disclosure-wise, that's fine. Equity, okay, they've shown only capital and current. Okay, I've left drawings here as well. Right, you can close drawings if you want to, but then you'll just show a working, current minus drawings. I'm going to leave it as is here. All right, so this was 29503, that's fine. Okay, disclosure-wise, did they show the long-term and the short-term separate? Yes, they did. There's the long-term, there's the short-term. That's fine. Okay, the trade payables, fine. There is a note though, they might have combined a few things because I see they've only got 3 lines and I've got a few more here. Right, they've probably added this figure with the accrued expense, okay, as well as the accrued, yeah. So if you take this figure plus that figure, you'll get their total. Right, they've just grouped it as trade and other payables. Right, the current portion is there, the bank overdraft is there, the total should be fine. Is the total fine? Where's my current liabilities? 34,529, yes, 34,529. Okay, yeah, the balance sheet looks fine. Okay, it was just that slight error with the disclosure here. Okay, yeah, sorry about that. I should have drawn a timeline to be more specific. It's better to draw timelines to show that working, especially when they give balances at the end of the year. That was a mistake. And then just overlooking the current account, something I shouldn't have done. Okay, but do you have any questions? Are you okay? Do you see how similar this is to 1502? Hey Cheryl, do you think you can manage all these normal 1502 workings? I don't think you'll struggle too much with those adjustments. The statement of changes in equity, that we need to look at, right? Because this you probably haven't looked at before. Okay, I see you're busy typing. All right, so that's something that you need to look at in terms of working. So let's do another activity next week. But for the next one, can you just get the workings in terms of debits and credits? That's all. Okay, do they give you more here? Let's see. Yes, they do. Okay, we can do exercise 3.2. Do they give you another one? Or is that it? Okay, they give you another one. All right, so let's do 3.2 and 3.3 next week. Is there more? Is that it? Okay, that's it. All right, then we can complete that little bit. All right, so I will look at the disclosure for the partnerships with you next week. Let's see if you can get all the disclosure right in terms of workings for these two. Okay, we can go through one from start to finish. Okay, so you have another question and you can see all the detailed workings. Yeah, the SOCI is new, I agree. Okay, yeah, the SOCI is something that you wouldn't have seen before, but all those adjustments you should be okay with. All right, is that okay? Does that make sense? Any other questions about this one? Okay, I see you busy typing. Okay. Yeah, do the workings for 3.2 and 3.3. When I say workings, just the debits and credits, similar to what you did here. Okay, so don't look at the whole question, just look at these things. Okay, these are these adjustments. Right, so the dish information, that's all. Okay, look at the dish information. So for example, let's look at one here. Okay, this one you won't even have an adjustment because this is something that you would look at in the SOCI. Okay, SOCI I'll do with you. Don't worry about that. Okay, this one is SOCI, salaries and wages for the partners. SOCI. Okay, this is an adjustment, possibly. Okay, because they've given you inventory. I don't know if this is start or end. You're going to have to look at the dates. Okay, it looks like end because I see the year end here. So this is probably going to be for a inventory calculation. Right, and then depreciation. All right, and that's it. There's very little here. Okay, you've literally got two to look at. All right, so two workings for that. What to debit, what to credit, what to debit, what to credit. Okay, and then if you go look at number 3, maybe number 3 is a bit longer. Actually, it's shorter. Yeah, number 3 looks shorter even. All right, so again, this is SOCI. And these are workings, yeah. So that's the adjustments. Okay, so you can do some debits and credits for those ones. Right, the top part relates to the partnership. That we can go through again when we look at the SOCI. Right, if you want to try it, you can look at it, but it is new, it is different. You might have to go through more examples first before you get the hang of it. Right, just remember, when you look at this disclosure, okay, every single column here belongs to the partners. This column is the T account when you're looking at profit and loss. Okay, the only thing different with an appropriation account is you have to consider all these individual partnership-specific transactions. Right, that one we can highlight. Okay, that's one that I had overlooked, okay, when I read it. Right, the rest is all specific to the partners, and then you had to adjust the appropriation. Because remember, who compensates the partners for their investments? The partnership. Right, remember this 1,000 and this 2,000, this 1,000 and this 250. The partnership is actually giving those two partners that benefit. It's coming from the appropriation. Okay, there'll be less profit to share if there's more interest on capital. Notice none of these, interest on capital, interest on current account, interest on drawings, partner salary, none of them went here in the statement of comprehensive income. Okay, please remember that. Okay, you never, ever, ever show partner specific transactions here, because remember, this is not the partner, this is the business. Okay, business separate from partnership. Okay, the partners and the business are separate. The business is what we're doing. This is what we're doing. Okay, this is the ownership. Okay, the partnership is the ownership of the business. Whatever the business generated then has to be shared between the partners. Okay, are we right? I think let me phone you on WhatsApp and hear if you're okay, and then we can wrap up and end the session. Hi, Cheryl. Okay, how are we feeling? Okay, so far so good?
So far, yeah, so far. It's only the statement of changes in equity that's a bit complicated, I would say, or new.
Yes. But when we were going through those workings, how did you find those workings? Are you comfortable with those 1502 adjustments? Depreciation, credit
The
losses,
adjustments,
allowances?
yeah, that wasn't a problem.
Awesome, good. Okay, so that seems
The
that
adjustments.
yeah, that seems to be your strong point then. If you are comfortable with adjustments, then you never have to worry about those sections. Then you just need to focus more on the disclosure, okay, the new sections, the SOCI, the statement of changes in equity. Those are things that you'd have to look out for. All right, so I think for next week, just look at those two short activities. We've actually done the long one. Okay, number one was the long exercise. If you look at 2 and 3, those are actually the shorter ones. So if you want to go through. Hi, Cheryl. I think this is much better. The connection's not working today. Yeah. Okay. So, yeah. So I was just saying that we've looked at the long question, which is the 3.1. Do the short questions, 3.2 and 3.3, and just look at the workings. I'll take you through both of the SOCIs for those two questions, and we'll go through it in detail again. So at least you have a better idea of how to account for those adjustments. Okay, because remember, it's the partnership that's generating the income, and it's going to be split amongst the partners. Okay, so just look at those two and see how they go in terms of basic adjustments, and then I'll take you through the SOSI. That you don't have to stress about. Okay.